Anupam.
সে করুন రికార్డు రాలేదు కదా రికార్డ్ ట్రై సౌండ్ రావాలి
Hello.
Hi, Ravi. Good morning.
Yeah, hi. Good morning, Aditya.
Hey. So, Ravi, I'm seeing 2 logins for you. Which one I need to make it up to most?
I'm just settling one. Was not happening from laptop, so I tried from mobile also.
So where I can see a video, I think that will be the active one.
Yeah, that is
Right.
from my laptop.
And can you hear me?
I will just leave the other like this only.
And can you hear me?
Hi Aditya.
Hi Anupam, can you hear me now?
Yeah, I can hear.
Great. So maybe we'll give a couple of minutes to others to join and then we can start.
Yes, we'll just couple of minutes to wait.
Hi Manoj. Anupam, you want to go ahead and start? Anupam? And can you go ahead and start? Anupam?
Shall we start?
Yeah, please start.
Good morning, all. A very warm welcome to all participants. Myself, Anupam Petkar, from a think tank multidisciplinary global platform, welcomes you all to Think Tank India Growth Global Conclave for India Growth Story and Meet the Experts series, covering in detail IBC Think Tank, Financial Reporting Think Tank, RERA Cooperative Think Tank, FAFP ISA Think Tank, Valuations, IPO, and Capital Markets Think Tank as a major part of Think Tank at Viveka Patra. Viveka in Sanskrit means knowledge and wisdom. Patra is an innovative news updates containing slides on sharing latest developments and real-life examples by CEO, CXO, CFO, specialists and professionals with global experience. Today, we have a think tank multidisciplinary global platform special meeting for all stakeholders in finance, corporate affairs, industry, and profession. Think tank has been in existence since decades. Idea was basically conceived on 6 January 1990 to have conferences, conclaves with CXO, CEO, CFO panelists, and specialists, sharing experiences and real-life examples. Our panelists are finance leaders working in reputed companies or professions since many years and have deep domain knowledge. Think Tank platform, now digital, has got overwhelming response globally on a digital mediums and expanding very rapidly through LinkedIn, Facebook, and social medias. Our participants and experts have rich experience in industry and profession who have done prestigious qualifications like ICAI, CPA, CFA, CFP, our Indian qualification CA, CS, ISA, DISA, FRM, IFRS, Masters, PhDs, who have been sharing experiences and knowledge, wisdom as a reach out initiative globally in spite of limited resources. Due to overwhelming response to our annual report, corporate strategy, and ESG, we have announced 6P awards and recognitions. 6P stands for Profit, People, Planet, Professionals, Powerful Influencers Platform for corporate annual reports, analysts, professional achievers, CEO, CXO, CFOs with respective jury who have a rich experience in interaction with all stakeholders and hosts. The recognition and rewards will be announced with the rigorous process of scrutiny and choice and interaction with participants and will be given digitally and if possible in a well-located auditorium in Mumbai, like Yogi. So, as participants are aware, recently we have launched a much-awaited reference type of newsletter appropriately titled Think Tank at Viveka Patra, India Growth Story. It's a comprehensive conference material compilation over 600 pages, sharing experiences by CEO, CXO, and CFOs, with experts, with updates and latest developments and series on financial reporting, Ind AS, IBC, taxation, digital, capital markets, technical analysis, ISA, bank audits, corporate affairs, blockchain technology, and would be available for subscription and any ethical contributions by well-wishers, etc. We will also be covering important and latest development as suggested by many participants in coming weeks. For example, valuations in financial modeling, health is wealth, cybersecurity, blockchain, MSME, etc. We request all subscribers. To subscribe to Think Tank YouTube channel for watching summits, conclaves, webinars, and join, connect, and network on Think Tank webinars group on LinkedIn and Facebook page, Telegram channels. We once again welcome all members and panelists and share few insights on Viveka Patra at Think Tank Viveka Patra Growth Story. I would also like to thank my colleagues in digital global team, Aditya, Ajay, Anurag, Archana, Aishwarya, Nipun, Pramodji, R. Kannan, Manish, Santosh, Vijay, Vivek, Yogesh, and many others for regularly contributing to Think Tank. Today we are excellent Think Tank multidisciplinary platform seminar sharing with eminent stalwarts and specialists who will be sharing experiences and latest developments. So let's have a very interactive event. Thank you. May I invite Manojji to have few words before we actually hand over our session to our speakers.
Thank you very much, Anupam. It is indeed a delight for me to be all of you today together for this excellent presentations and interactive discussions on the multidisciplinary global platform. So requested by many speakers, participants. It's nice to have topics, practical, relevant topics for stakeholder community on very, very vital issues. Valuations have become very important the way the markets are behaving globally and in India, and also we know recent developments. And also valuations are very important for all professionals and multidisciplinary functions. So many professions and investment bankers and promoters are involved in valuation to increase their net wealth. It's very, very important for wealth creation, where professionals play a very important role, and all stakeholders are looking to minimize risk and maximize wealth in a proper way to ensure sustainable wealth is created. And very vital topics, so many speakers here from different functions, corporates, industry, profession. And glad to see Mr. Ravi Jain. Are you here with us?
Yes, Manoj, I'm here.
Yeah, hi, Ravi. Wonderful to have you here. You are a professional with deep experience in industry and also in profession, and looked at valuations from various perspectives, and also tracking recent developments, including developments this week and recently. And particularly, there are so many issues coming on manufacturing companies due to pandemic, and also internet company, where India is now moving ahead very fast. We know the stories of Sapphire, Paytm, Policy Bazaar, Zomato, and so many wealth being created, and also whether it is sustainable. Krishnan Iyer, you are there with us, right? Krishnan?
Yes, sir. Yes, sir.
Yeah. Rich experience with the Aditya Birla Group in financial services, practically all the financial products you have seen, right? And engaged with many fund managers and stakeholders, corporates on that, and so many other participants who are speakers in their own right and have been contributing on the topics of their specialization, and also to make it very, very healthy and interactive. So many topics, a few other speakers are looking forward to join. So exciting session ahead. I would, and Anupam has been, you have been doing a wonderful job. Rich experience as a CFO in manufacturing and service sectors, both across the years. A young professional and a young CEO. It's fantastic to have so much talent here, and to have regular interaction, and also the work being done to build a brand of the professionals and professional bodies. So Krishnan, in 1 minute, can you just share something about yourself, and then Ravi, let's start your presentation. So lots of wholesome content ahead on valuations.
Sure, sir. Do I introduce myself, sir?
Yeah, just about yourself and the work you have been doing across the years, particularly in financial services, until Ravi starts the presentation.
Sure. Thanks. Very good morning to all of you. Trust my voice is audible. Hello? My voice is audible, sir? Anupam ji, others?
Yes, sir, you're audible. Sir.
Okay, great, great. Thanks to always pleasure to be connected with chartered accountants and senior from the industry. My name is Krishnan Iyer. My background is I am a Mumbaikar by heart, soul, everything. I did my MBA Finance from Mumbai University way back in 2002. Then 2002, somewhere this point of time, the private life insurance were just getting started up. After IRD gave them license in 1999. So I was one of the first members for Birla Sunlife Insurance Mumbai sales team, setting up the alternate channels in Mumbai. Okay, so life insurance was the sunrise industry then. Okay, so first 3 years I was in bank assurance sales within Birla Sunlife in Bombay. Then in 2005, I shifted to distribution training, which is enhancing the capability of the sales team, the distribution partners. From 2002 to 2016, for 11 years, I spent as I was part of the sales training team and learning and development team of Birla Sun Life Insurance, wherein I would have been instrumental in training the employees of Birla Sun Life, the distribution partners, their employees, which include Citibank, Deutsche Bank, Karur Vysya, Catholic Syrian Bank, you name it, Bank of Rajasthan, Bank of Punjab, you name the distribution partners. Birla Sun Life had the privilege of being associated with them. Then, apart from this, the investment banking team for various wealth boutiques like Centrum, Anand Rathi, I would have been instrumental in as a product expert in helping cross-positioning life insurance as a wealth creation solutions. So I would have covered topics like retirement planning, education, then business insurance, then risk management practices for financial risk management solutions. Okay, so this was so very simple summary. 14 years I worked with Birla Sun Life Insurance in mix of sales and training. Then last 4 years odd, I am on my own. I am into corporate trainings, predominantly with focus on financial literacy programs, wherein I am doing investor awareness program in partnership with many.
Krishnan, very good brief about the good work you have been doing. Ravi, we'll have more of you. Ravi?
Sure.
You are ready? You can start your presentation.
Sure, Manojji. Thank you so much. And thank
as
you.
suggested by you, we'll make it very, very interactive. You can introduce yourself in your own way, what you have been doing in industry, in profession, and also multidisciplinary professions across, and how you are doing to do value-added work and encourage others to do value-added work and build a brand of the profession and India in the India growth story globally. So India is at the forefront in the world, not only in values, but in GDP, and be a fastest growing economy in the world as is recognized by all the global investors and rating agencies. Yeah, Ravi, it's your
Definitely, sir, definitely. So I think with this kind of words and vision, India is definitely leading towards real growth and, leading towards being the developed country in the future. So thank you so much for the opportunity, and thank you all the participants to be here. Thank you to hear Krishnanji and Anupam for the nice start. So myself, CA Ravi Jain. I'm in Mumbai since last about 20 years. So I did my chartered accountancy course here and qualified in 2004. And since then, last 15 years, I was into various industries, and I started my practice since last year only. So initially, I was in Dubai for 2 years in the real estate companies as an internal auditor, and then came back to India. I was into some other real estate companies working into various roles, from deputy managers, senior managers to various posts. And lastly, with the merchant banking companies, handling into, again, various domains of finances into their businesses of whether it is mutual funds, whether it is valuation services, or whether it is bonds and debt capital market. So, and lastly, I was the director of a couple of companies with them also. One of them was the valuation advisory services company. And since last COVID period, I was about to shift to Delhi, but then I've taken my step back that I wanted to stay in Mumbai only and wanted to do something on my own, and where I can add value to the professionals across the streams of their studies, whether it is chartered accountant, company secretaries, or cost accountant, because subject is as such which attracts all, which is my core subject is now valuation. I'm a registered valuer with IBBI also since 3 years. And last 1 year, I'm doing my own practice with a CA firm, Ravi Jain company as a partner and focusing on the valuation services. So with this, I will like to start my presentations on the valuation services. Is my screen is visible now?
Yes, sir. Very much visible, Ravi.
Thank you.
Yeah, and Unmesh is with us. Unmesh Narvekar, you are with us?
Yeah, I'm with us.
Yeah,
With all of
can you
you.
put your video
Thank
on?
you, Unmesh ji, also for all this enlightenment and connecting with over here.
Yes. Thank you for your.
Umesh, just put your video on and share a few thoughts. You have done a lot of initiative and for today's session and getting encouraging so many speakers from the branch and the profession and multidisciplinary functions to contribute their knowledge and experiences. Umesh, a few words from you before Ravi starts his presentations on valuation with practical issues.
Thank you, sir. Thank you for this opportunity. Rather, it's my pleasure to be inviting all the upcoming speakers, new speakers, rather, to this platform who are very versatile and they are very experienced in this subject. And one of them is Ravi, who is going to present the valuation. He has a very big experience of industry and done a very good job in the valuation field. And it's really a pleasure to listen such stalwarts in the profession and who interact with us. And it's really enriching knowledge of our participants. Rather, this is an opportunity for all of us to listen to various new subjects. Think Tank is altogether a different platform, which is giving this opportunity to new speakers to share their thoughts and share their experiences in various fields. And I really appreciate the way the things have been handled. The organizers, Manoj sir, and all other participants who are taking the benefit through this platform. I really wish all the best to all the participants for today's program. And I hope participants will definitely enjoy the sessions we are going to be there on valuation and other NPS and all these things. Thanks, sir. Thanks a lot. Welcome.
Thank you, sir.
Yeah.
So, with this, I'll start with my topic of understanding and practical discussions of business plan, financial model, and DCF value. I think this first few slides are already covered by the Anupam about explaining the think tank and the multidisciplinary team, the think tank. Now, first, I wanted to see why valuation. When we talk about the valuation, there is a requirement under various statutes. There is a Company Act which requires the valuation to be done by a registered valuer in case of allotment of shares, issuance of shares, sweat equity, merger, amalgamation, reconstruction, exit of dissenting shareholders, and winding up process. There is an insolvency and bankruptcy code which requires the valuation to be done for insolvency process and voluntary. I was about to see that only, that how I can mute the.
Yeah, you continue. I muted the other participants.
Okay, thank you, sir.
Welcome.
Then SEBI, RBI, and income tax also requires the valuations in case of various things like delisting, sweat equity regulations, sale of stress assets by banks, and income tax section 56, rule 11 UA, and section 55A requires the valuations. Other than this statute requirement, we have a requirement when the business purchase, business sale, merger, acquisitions, reverse merger, any such thing happens, when the management buyout happens, the management requires the valuations to do and see how their business is having and how their business is getting the value. So I'm talking about valuations here at the very basic starting point, basically, which is not the share market valuation. So when we see the share market valuation, at that point of time, the company is already listed and shares are freely tradable in the market. So the market decides the valuation of those shares when the people's sentiment will differ on the buying price and selling price. So what valuation I'm talking about is the statutory valuations largely of the unlisted companies before the listing process and before the IPO comes in, how those companies right from stretch from 0 to whatever X value they have grown up and they have arrived at their value. And there are formulas and there are methods for valuing the listed companies also based on the market movement and market momentum, based on the average pricing and all that basically. Now, next slides talk about the income tax valuation basically, which requires under Rule 11U. If the valuation is done as per DCF valuation, then the valuation report from a merchant banker is required. But otherwise, the DCF value can also be done by the registered valuer largely. And understanding of business and forecasting business assumptions with reasonableness is required. So in this presentations, because valuation is a very big subject, it requires 6 months of training at least minimum into various domains. So I have covered a very small topic on this valuation, which is a DCF value, discounted cash flow valuation, which is very widely used. And section 55A prescribes circumstances where references can be made by the tax authorities to a valuation officer. The valuation officer means same as per section 2R of Wealth Tax Act 1957. So why I'm talking this basic knowledge, we identified who is registered valuer, who is merchant banker, and who is the income tax officer and the valuation officer referred by the income tax officer. So there are three different things. So I'm talking about as a registered valuer, how we do valuations, and which requires a lot of calculations and iterations to do and arrive at the final value. And we are governed by the IBBI as a prescribed international valuation standards. So valuation standards are prescribed by ICAI used. So we talk about valuation principle. First, for valuation principle, we talk about valuation is an art and science both. So it's not just a calculated number. It requires a lot of to as an art and science both in terms of understanding business, making the business plan, making the financial model, and then arriving at the number. Basic premise for a valuation is a going concern and fair value concept. The fair value is defined in Ind AS. The price that would be received to sell an asset or paid to transfer a liability in orderly transactions between market participants at the measurement date. So this is the basic premise of valuations, and the general process for the valuation start with analysis of historical and current financials, analysis of future projections, if applicable, discussion with the management on future plans and assumptions. After analyzing, appropriate valuation method is determined. Now, how we see the approach and methodology? There are different methodology and approach to do the valuations. First is market approach. So when we have to see a valuation of a company, we can see the market price method, if it is listed, or it is a comparable companies multiple method. The same company is not listed, but there are comparable companies to which is listed. We can see at what multiple those other comparable listed companies are trading and valued at, and we can apply that formula to this company's multiple also. Comparable transaction multiple. If there is already transaction happens in the similar companies in the market, if there is any share sale and purchase happen offline, because when we are talking about unlisted, it is not in the listed market, but an offline transaction can also happen. That can also be compared. Next comes as an income approach, discounted cash flow method. When we discount the future cash flows of the company to present value by arriving at the weighted average cost of capital. Relief from royalty method, multi-period excess earning model, with and without method, and option pricing methods. So these are different methods in income approach, wherein we apply some formulas and see how their income will be beneficial in future and long run, which can add value to the business. There are cost approach, in which the replacement cost method is there and reproduction cost method is there. If we have to sell an asset, whether it is replaceable, what would be the replacement cost, and whether it is reproduced, or if it is manufacturing or something, we have to reproduce it. What would be the cost for reproducing the same thing? It will be applicable approach. Net asset approach, when we have a book value method, it is very simple. As per the balance sheet, we can see the book value or net asset value as per Rule 11U also. Net replacement method and net realizable value method. So this last one comes mostly at the liquidation stage, when the company is into liquidation and starting the proceedings, basically all the assets to be sold and what would be the net realizable value. So we have to apply that method also. This is all methods covered for a registered valuer. And one registered valuer has to apply the final method, which method needs to apply to value the things. Now, practically, since we want to make it interactive and share my experience also of doing so many valuations, which I have done previously in the organization, I was associated with, also more than 100 valuations I have done. And in last 1 year, I have done about 25, 26 valuations on my own. So practically what happened, sometimes we may have to see more than one method also. And sometimes we have to see average of those method also. So last week I have done some method, and one of these valuations, the book value was coming at 50 rupees. DCF value was coming at 3,000 rupees. And the comparable cost method was coming at 7,000 rupees per share value. Now, any idea what value I should certify? So there we should have an average method of all methods, or we can say what method suits well to the company. It is a different judgment. And ascertain liabilities in case of DCF, liabilities also. So here the point, skill and judgment of valuer. So when we apply the methodology, which methodology has to be used and which methodology has to apply and arrive at the final fair value, which we need to certify, a lot of emphasis has been given in the code of conduct also about the skill and judgment of the valuer, which should be highly ethical and highly practical basically. So valuer is entrusted with his judgment and skill set to use the appropriate methodology to arrive at a fair value. And among many methods, DCF method is most used method of valuation. We can say 95% valuations are done through this method, which is a fact, known fact. I will discuss now the practical nitty-gritty in DCF valuations, things to keep in mind, what may go wrong and how to develop or use the appropriate skill set to conclude a fair judgment. So it's not that I am advocating today in this presentations DCF value only, but it is that the DCF value is something which involve me into the business. All other methods are a derivative of other thing. If the share price of my competitor is this, my price should also be this. So again, it is derivative of some other company, how they are performing. And in other method, net replacement, if my asset is worth X, but somebody is selling that asset at Y, if I am doing the replacement method, if it is acquirable at Y, my price is also Y. So which is somehow always debatable and arguable that how I be analyzing my company with others. Yeah, those methods are there and they are applicable at relevant point of time. But largely, if my business is there, if I get involved into my business, I see a complete business plan and financial model of my company, then the DCF method is the only best method which is widely used also practically, because it gives a practical solutions out of the discounted cash flow method. Now, looking into the practical process for discounted cash flow, first thing is cash flow projection. What we see, any entrepreneur do the business projection or revenue projections, but what we need is the cash flow projections. So what is the difference? Business projection and revenue projection. Generally, people say that I'm doing X number of deals and X number of revenues and sales. So my revenue is this, expenses will be this, and my profit will be this. Now in cash flow projections, what we see exactly, we time the cash flow that and what point of time you will be needing the inflows and outflows, and when your inflow will be coming in, when your outflow will be going, and accordingly we'll be doing the proper cash flow projections and then discount it to the present value. So in this case, data gathering is become the first and foremost requirement, which is profit and loss account, balance sheet, and cash flow projections, which includes these components largely. I think the team over here and the audience over here will be well versed with this concept. Mostly will be the chartered accountants, company secretary, and cost accountant. And operating revenue, other income, direct cost, indirect cost, interest, depreciation, other costs, changes in working capital, changes in fixed assets, and cash equivalent as on the date of valuation. Because it is not necessarily I do the valuation as on the balance sheet date only, or as on the quarter ending numbers only. It can be any date in between the year also. But if the financials are drawn as on that date and cash flow has been prepared and projected from that date, it can be very well done the discounted cash flow valuation. The further requirement for me as a registered valuer would be understanding and deep diving into the business basically. So first, understanding the business, what is the profile of the business, nature of business, and scale of business basically. And then profile of the promoters, who is running the business. Shareholding structures, who are the shareholders and how they are made up and how they are involved in the business, whether the directors are having shareholding or not. Peer companies in the industries, beta of the industry, beta is the risk factor, debt equity ratio of the company, market premium, cost of equity, perpetuity growth rate, free cash flow to firm and free cash flow to equity. And then finally we arrive at the present value of the future cash flows. So I have this Excel sheet for a practical discussion of an illustrative business plan, which I have covered over here. If this slide is really visible, or should I open the Excel and get in more detail into it?
Open your Excel, that will be nice.
That will be nice.
That can be a live session we have done many times before, but that is the best way to get into it, how the tools can be used for benefit and how valuations can be, scenario analysis can be done, and also how manipulation can be done to get the output which a valuers want.
Okay, all right. So I will cover the first part
in advance. Okay. Isn't it? And then professionals are supposed to do the work, and nothing better than analytical tool, technological tool, which gives you scenario analysis, work out multiple scenarios and prepare the one suitable to the stakeholders, whether it is a promoter or a banker or a independent agency or banker looking at valuations, or even the regulator. It can be done for various purposes, including by the government for divestment purposes, OFSs, FPOs, IPOs, bidding, getting bids, auctions, IBC also, getting interest from the bidders.
Very true, sir. Very true. And actually, this is the irony that, people will decide their value and come to the valuation and do the back calculations. But frankly speaking, my focus and my target is that basically that when we follow the ethics and principle and get deep dive into the business, we can get out the real value. So it's not that the notional value and working the numbers basically, because DCF is not about working the numbers. That's why the registered values are interested with the looking into so many valuation methods and then arrive at the fair value. So sometime I given the example, the market book value is something, comparable cost method is something, and then DCF value is something. So looking into all the holistically, then the final fair value has to be arrived at. But of course, DCF can give a lot of possibilities of doing the Excel operations and working on the numbers, such as to arrive at the number which is desired. But at the same time, I leave it to the judgment of the individual that how they perceive the value. So here is my Excel sheet. So first we have this color code for the Excel sheet, which is the header, and the color is for the number coming from the formula and byproduct of the number, so that financial model is foolproof, so that nobody can question that so you have done some Excel manipulations and working here and there. So there is a yellow highlighted cell which is only the input numbers.
Yeah, this is fantastic. A real live modeling session.
Yeah. So, for example, this business I can brief. I have taken a business in which we are having a training sessions. So we are teaching some new methods, maybe some robotics or maybe some blockchain technologies or something like that. So it can be anything. Which is an illustrative number. Anybody can feel free to suggest also what could be this business also. And so number of students and number of people would be trained, and their fees structure and their cost accordingly, the profitability will be worked out. And this business plan has been made up thinking there is a education company.
Track record over time is to take care of themselves, whether you're in the US or in India.
So first thing that how so like franchisee model, we thought of that there would be some lead generation partners. So from those partners we will be getting this many number of students. So first row has been assumed that every year this many number of partners will be add up in the network. So this will be the cumulative number of partners, and number of students from lead partner 50. So for example, one lead partner will be referring you the 50 students, and there will be growth of 20% year on year. So how the number of students will be increasing, which has been calculated in the next 5 years, basically assumed. So assumptions are given here in the column I. So on those assumptions, this formula has been worked out. So everything is transparent, crystal clear, and fair, basically. assumptions and this input number of students will be keep growing. And then second plan is to generate the students is from cold calling. So this would be the cold calling. The ratio is a 2% conversion from the cold call inquiries. So for example, number of calls made by one person is assumed as 10 effective calls made by each caller per working day. So 5 working days in a week. So in a year, 264 working days has been assumed. And a number of cold callers has been assumed. 2 callers are hired every year with 5%, 50% growth. So accordingly, this many number of callers, this many calls, and this many conversion students would be there. And then lastly, we have assumed that number of students from social media. So social media, we have assumed only 0.50% conversion out of the total inquiry at various social media platform. So if we are assuming 1,000 inquiry per week from the social media, this is the way the number of students will be made up. So total number of students putting from all these three will be this, and then we have bifurcated the ratio of students for 1 month course, 6 month course, or 12-month course. So this has been bifurcated again with this formula. So you can see the gray cells are all formula driven. Only these assumptions are there in the yellow cells. And then revenue assumptions for 1 month course, we have assumed that in this yellow cell 4,999 will be the pricing. 26,999 will be the pricing for 6 month course, and 29,999 will be the 12 month course like this. And assume the 5% hike in revenue. So this is the how the valuations and revenues will be calculated. Then there are manpower assumption in the next sheet. I will show the cost assumptions is there for 25,000 rupees will be the cost for logistic and supports to each lead partner. So if you are having 10 lead partners in first year, it will be 25,000 for each of them. Then there are direct costs of providing robotic instruments, the instrument from which we are doing the training and all. Then sales and marketing expenses. Initially it is high, and then gradually it is reducing each and year on year. Because when we scale up and grow the business, the proportion of the marketing cost and sales and marketing cost reduces. Then there are other admin overhead. All this is assumed. So we can change the number over here and it will change. If we don't want to reduce it, we want to keep it 0. So every year this will be 20% will be straight like this. So then computer and software, we assume that 35,000 rupees will be the computer, and including the softwares will be used for one staff. Then there are brand development costs. So sales and marketing is different, and brand development is totally different for having high level of marketing, media, TV news channel, advertisement in newspaper, etc. So we assume 2.5 crore for each year, 3 years. 7.5 crore, the maximum expenditures is being done in this 3 years. And for office premises, we assume that we will book and construct and furnish in different years. So this is how we'll be doing the office premises. Then working capital requirement has been assumed at 4 months of cost to be kept as working capital, receivable at 1 month revenue, and creditors for direct cost lead partners again 1 month. Equity infusion has been assumed at 10 crore. So these are the number in rupees in lakhs. So 10 crores of infusion has been assumed as a seed capital, and then tax rate as 25%. So manpower was a separate sheet. Here it is a manpower. We will be having this many number of staffs with this much of annual CTC. So we will be requiring that many number of staffs overall in year on year. And then their salaries and the incremental 10% every year will be doing. So moving to the next working sheet in this Excel sheet, which is of actual business plan, which is all derived numbers from those assumption sheets basically. So what would be the total revenue? In first year, it is assumed that 1.23 crores would be training fees, then 4 crore, 8.37 crore, 50 crore, and 25 crore. Reducing the direct costs, other lead partners cost, manpower cost, sales promotion, and all these things, we will having a EBITDA, which is almost break even in the first year itself, and then keep on growing for the next 5 years. Then depreciation on the softwares and the computer we have planned to purchase, and accordingly all these things can be assumed. The profit after tax will be profitable in the third year onwards. So this is the way profit and loss account looks into, and the cash flow statements look into the profit after tax, depreciation, and the equity infusion. And then we have users of funds in fixed assets, working capital. Then there is the operating cash balances. So we are having a closing cash balances year on year. In third year, we are having nearing to 0, but then again, fourth year onwards, we are making it positive cash flows. On the fixed asset side, we have this brand development cost has been capitalized year on year, and then inventories and other current assets has been assumed, and then accordingly we have made this complete business plan. Now, what is the summary of financials? This shows us that what is our top line and what is our operating profit and what is the business numbers, because number and scale of operation is also key. In the 5th year, we are reaching to train 14,900 students. So that itself is a valuation number. Now in this valuation, I'm jumping to the valuation sheet fastly because all this is consistent. So now we have to do the calculations of the working capital and cost on capital, and then derive it the cash flow value. So we see the zero coupon rate. What is the interest free rate? As on in this, I have assumed that September 30 is the date in which I'm doing the valuations. So beta has been assumed at 0.97 for the industry beta less than the 1. So having a low risk in the education business, perpetual growth rate at 5%. There is a high risk premium given to this because the startup, it is a new innovations and new startup. We are starting from the stretch. So there is a high risk premium added over it. And then expected return from market is in the right side is 15% based on the BSE 500 index. And then cost of capital has been worked out at 26.77%. So all this profit before tax and profit after tax, reducing the other income, making the adjustment of changes in fixed assets, and reducing the cash flow till date if any. And we are with the discounting factor, we are assuming that the DCF is coming at the 34 crores, which is 34,032 rupees per share value. Is it possible? So anybody would like to answer that? Any questions or any answer right now till date? If we are working in such a fashion in an Excel sheet, the valuation comes into for a startup, which is a 10 rupees share, 1 lakh capital, and they incorporated a company, and 10 rupees shares become a 34,000 rupees share. Is it possible?
Ravi, you have done a valuation for a business which is in an educational field, right?
Yeah.
Yesterday evening, I met a professional and he was talking about startups in educational fields. They want to raise funds, and he was looking at valuations, but the promoters, even the beginner startups, are now comparing themselves to Baiju. Valuations of that.
Right.
Type of ambitions they have, isn't it interesting?
Right, very interesting and very true fact. Also, I also come across such people basically that see that because Baiju को इतना मिला है, White Hat Junior को इतना valuation मिला है, मेरे पास भी idea है, मैं एक business बनाता हूँ, मेरे को इतना valuation दे दो और funds दिलवा दो.
And they have not even invested even $500,000 in the business themselves.
Right, right.
I'm looking at the rupee terms, but it is good to have ambitions and goals and mission, but
Correct.
they need to be sensible and realistic. Correct. And get insights and experience of professionals like you. As you said, you have done over 100 valuations. It is not only the first target, big ambitious one, but it is achieved in stages, right? Step by step. It has to be backed by performance and integrity. That is very, very key. That's how you get the confidence of the stakeholders.
Very true.
First is ethics and integrity, and then you show your credibility and your fire in the belly, and how you are able to reward the people who have started with you, the co-founders, the first stage investors, isn't it?
Very true, sir. Very true. So that's why I wanted to go back to my previous slide before starting this Excel. I said these are the first requirement is profile of the business and profile of the promoter. So we understand the promoter and their vision and the zeal and the involvement of the business. It's not that I'm already doing one business, I will having a multiple business, and because for valuation, I will create another business and get the value. So there should be person who is driving this business. And if he's really dedicated and committed to run this business, it can make it possible. Only in the calculated number, it is not possible. But in terms of dedicated efforts towards running the business, it is very much possible. So these are all these Excel sheet related slides only. I have put it over here. And in my practical experience, I want to highlight why this Excel sheet is too much required focused to be very accurate. Because I have experienced one of our valuation has been questioned by income tax officer. We have done the valuation as per the Excel sheet and arrived at the formula and this thing and submitted the report. And when the report comes, the officer was doing the calculation on calculator that cost of capital is this, how you have calculated. Let me also calculate in calculator and arrive at the same value. But he was not finding the same value. Why? Because there was a small silly mistake and error. For example, we have taken the perpetual here 5%, but it was taken as 4.5% in the Excel sheet. But when we do the rounding off, it is showing as 5. Here I have shown in decimal, 2 decimal, I have shown it over here. It is 5.00. It is not mistaken over here. So we care for that also, that we should not make a silly mistake and a small mistake, because valuation is such a subject. We are interested with the high ethics and high credibility to certify a right value. So that's how we have seen that 34,000 rupees per share is value is coming into for this company as a startup and as a education venture on the basis of discounted cash flow method. Now what happened, face value is 10 rupees per share, and after of 10 rupees, because important point we have seen in this Excel sheet, we have assumed that 10 crore rupees has been infused, and then the working is like this. So 34,000 rupees per share value, the company valuation is 34 crore, but the pre-money valuation is only 24 crore, because only after infusion of 10 crore, it will become 34 crore. So what is the reason for increase in this value? If there is any justifications, we have seen, and feel free to interact and suggest more such reasons from your side also, if you feel any. It was some of the reasons from my side that it's an innovative concept. So yeah, of course, right now Byju's and White and Juniors are already taken up the market, and the education field is such based on technology, it has gone a long way. But still, if there is any new concept, we can claim that if there is an innovative concept, we are really going to make this happen. And again, if the profile of the business and the promoter is fully dedicated to the business and going to run the business in the long run for making it profitable. So profile of the promoters include their age, experience, and the future commitments. The scale of reach. So we have seen the scale of reach is unlimited, because on online education, she can do it across the city, across the state, country, or as well as go globally. And what is the channel of expansions? So again, this business plan was important because it was thoroughly prepared with the each and every minute details that how he is going to expand the business in multiple channels and multiple methods basically, and then expanding. So that shows that how thorough study and thorough business knowledge and business experience the promoter has by which they are doing this business growth expectation and projections basically. And what is the industry size and demand? So of course in education there is ample scope and demand is also there, but of course there is a competitor also, which is a negative factor. And then reasonableness of assumptions. So if assumptions we have made is realistic, so if you go through the minute details, we have assumed only 0.5% conversion on the social media, that can be reasonable. And then probability of success. So again, even after all these positive factors, I will see the probability of success maybe 20% or 25%. Because the competitors are much higher advantage and already killed the market like anything on this education space. But still this can be tried, and this can be taken up by different people. So this was the summary of so far calculation and illustration of the business plan and financial model. Any questions so far?
Interesting thing which Ravi, which comes out from your this slide is a professional can really create value for the business in a nice professional way, scientific way, by funds infusion of a reasonable amount and achieve a good valuation of even 34,000 rupees per share properly without any manipulation, right? This
Yes.
is how value can be added by a professional. And also it is really easy and convincing for the investor, whether the promoter or whether the financial partner a stage one investor to get a proper value, and this type of value per share can keep on increasing with good performance based on proper cash flows and business models and sustainable models, right?
Exactly, sir. That's where my point is, to be precise, we as a professional can add value. And why I'm sharing this to all the special audience over here, that when I have done so many, more than 500 such business plan and valuations exercise basically. Maybe for companies in which I was associated with, initially itself, I was into business planning and strategy department for the company. Also, every month, based on MIS and based on the last month performance for the future projections, we'll keep on revising and keep on updating this. So this gives an additional advantage to a professional, whether he or she is into industry or in practice, whether chartered accountant practice, company secretary practice, or cost accountant practice. It is an add-on advantage for understanding and deep diving into the business plan and financial modeling, which give them the extra advantage in industry to be on the top of the ladder of reaching toward the top position, because this gives a controlling positions. When you know the business plan and financial model, you are in a controlling position in the business also to how to run and manage the business. You can take the leadership position over here there. And in the profession also, when you guide and support the properly to any entrepreneur or your client, you can really add value to them basically. And now what happened, for a fair ethical view and ethical representations of a registered valuer, we do a valuation for the business plan which is submitted to us by the entrepreneur. We don't get any changes or any alterations to them, that projections basically we are not supposed to do, because they have the business plan. We just need to analyze and certify that basically. So I personally don't do, but that's why I share this with others basically. Then it can open up an opportunity for others also, which I have done earlier previously. I can share this knowledge with others basically. It can be other opportunity for them as a consultant. So as a business consultant, they can very well do this business plan for the entrepreneur, and then come to people like me or anyone else basically who is a registered valuer to do the valuations. So that is my thought process, because I believe whatever exam I have passed, I have exam of chartered accountancy, then I've done the DISA course, and I've done the many of the merchant banking course, mutual fund course, registered valuation course, investment advisory course of NISM when it was required in my company. Everywhere I see the passing marks are 50%. So I see myself as having a knowledge of 50% only. And for balance 50%, I go to my friends. Because in proper executions of any particular task, even the 99.9% work done is no work done. That is I learned in my corporate experience of last 15 years. 99.99% success is no success unless it is 100%. So I try to be 100%, but I have educational knowledge of 50% because I'm 50% pass out. I share with others and I do the networking to have multiple people be associated and get opportunities for everyone.
Yeah, good morning, Ravi.
Yeah, good morning, sir.
Yeah, Dushyant Shah here.
Yes, sir.
Yeah, now, you said that whatever fund flows and the business plan, the person gives, the client gives, that is normally accepted and it don't make any change, right?
Yeah.
Yeah, so now when the valuation is derived out of that, now in that exercise, what is the valuation done by the valuer?
So valuer is a certifying authority as registered with the Insolvency and Bankruptcy Board of India. So it's a statutory requirement and the legal requirement that they should do that certification with a fair judgment and fair value principle. So what is the existing thing? They are applying their methods, formulas, and knowledge to certify what is the fair value for that.
No, in that case, suppose you don't question them about their projections, then how can the fair value come? Suppose they always put on the higher side, and suppose we don't challenge that, then higher value will go and we end up certifying higher value. So it doesn't remain fair. The fair is that the valuer himself accepts the projections, in the sense he has scrutinized the basis of projections and is agreeing with the projection. Then only it can be said that the valuation is done by the valuer. Otherwise, the valuation is already done by the client. You are only certifying it.
So valid point, right point. But what we do, if I have missed out in explaining myself, in cost of capital, if you see in these illustrations also, I have taken 26%. So in the cost of capital, we adjust that premium, what they are over projections they are doing, and the underperformance their company is supposed to do. And also in the cash flow, also after the summary of the cash flow, we discounted for the liquidity premium. So we can discount that based on the our judgment that they are projecting it inflated cash flows, but we are projecting realistic that can be reduced by this many percentage, and cost of capital will increase, which will derive their value lower to what they have expected.
But cannot we question them about the basis on which the projections have been made? Suppose somebody would have taken say sales growth of say 15%, but history says that it is not 15. So can't we say that no kindly tone it down to say 10 or 12%?
No, saying kindly do it down is again manipulations. But yeah, making a point that industry is making this much profit and you are not doing that. And if the client want to revise it, they can of course revise it basically.
Yeah. So what I mean to say is that
there would be couple of discussions and dialogues with the client. So they are doing.
Make them revise. Yes, and make them revise to the realistic level. That's what I mean.
Of course, that practically happens. But yeah, of course, finally, whatever they will be, it can be in the process of dialogue and discussions, there can be revisions to that financial plan and business plan. But whatever the final business plan they have submitted, we are supposed to do the fair valuation of those business plans. Again, despite all this, we will do adjustment in our cost of capital and reduce the cash flow probability of success rate.
Okay. Thank you.
Thank you.
Ravi, I have one question with you.
Yes, sir.
How the valuation can be made realistic, basically? Because see, normally as far as startups are concerned, or maybe if it is rather take for a startup only, the entire concept is on paper basically. Okay, there is no realistic assets liabilities on paper in real sense, and the valuation is been done for financing or for investment purpose, what it may be. So what tips you will suggest to make the valuation more realistic? As far as the running organization is there, we have some substance over there where we can work out some figures and we can try for that. But as far as startups are concerned, it's very premature. Rather, we can say it is purely on paper. The concept, idea, everything is on paper only. And since a huge amount of valuation has been derived, worked out, it may or may not be the real sense that happens in the over longer period. So what tips you will suggest, or what points, precautions which are necessary for make it more realistic? Such, please.
Very true, sir. So I will again go back to this previous slide wherein I have mentioned the steps for analyzing the valuation. First and foremost is the profile and nature of business. What business they are into, whether the promoter and entrepreneur has full knowledge, deep dive into it, and then really keen to do this business in the longer run. It's not that he's doing multiple business and opening up another business and all. So who is the focus leader? Sometimes it may happen there is a group of companies and who are having different businesses and industries, and there is a new industry they are opening up, but they appoint a new leader for that. Who is the CEO of that company, and what is his experience, his thought process, and his vision for the future. So understanding and aligning that is the first part of the starting point of the valuation, basically, that he is actually going to run the business, number one. Number two, how he is going to run that business. So which comes into this business plan and the working of this Excel sheet, basically. So business plan and financial model are two different things. The business plan is the plan of the person who is going to run the business. What is his vision? What is his perspective? How much people he want to hire? How much team size he has to build up? Where he want to expand his business? He need to reach to retail or wholesale or large scale business or SMEs. All that things, basically his plan is like this. And financial model is, again, it's a working thing. There can be, as rightly a question by Dushyant Sir, that it can be revised and it can be some calculations can be errored and reflected over there and can be rectified also. So financial model is just an Excel sheet, but business plan is something which is a vision. So aligning these two makes a final financial model and business plan financial model, which is used for the discounted cash flow method. So if these two things are aligned, and then we have a real reasonableness in the financial plan, we have seen based on our knowledge as a registered valuer. We are having knowledge of not only chartered accountancy course, but so many other laws and regulations also, that if the company goes into liquidation, to that stage we have to think of that how people will be realizing its value. So we think that if company is investing heavily on the assets, then assets are there for long term. It will remain their value. If they are investing into the land and building, it will be grow based on the real estate value also as well as the business value also. So we apply these two things together. If the company is investing into the people, so people having a high qualifications and high know-how, it will always be a added value. If the company is expanding through the channels and franchising model and the business model, so scale of operation is high and it is asset light. So all these factors we see, and then we see that the same thing has been reflected by this entrepreneur also in this business plan and financial model, and it is realistic, then we can arrive at the final valuation.
Ravi,
Yeah.
how do you take the perpetuity growth rate? On what basis you calculate that? Are there any benchmarks and yardsticks? And from where do you get them?
Yeah, so benchmark and yardsticks are generally, it should be in the range of 2% to 5%. It cannot be more.
Why? Why not?
Even it is more, we take this perpetuity growth rate at that value and then derive at the valuation. Why not? Because if there is a high, if you are doing a 5-year valuation or 5-year business projection, in 5th year there is a 15% growth, because initially there is a loss, there is a robust growth, and 3rd and 4th and 5th year also there is a 15% growth. But it will not be perpetual. It can be 6th year, 7th year, 8th year, 9th year. In 10th year, it can be come down to 5%. So,
and for how many years generally you do the spreadsheet calculation?
So 5 years is the minimum. We can go up to 10 years also. That's what I was explaining. In 10 years, if 5 years the business is not settling down at a nominal growth or a reasonable growth for a sustainable future, then we take up a projections for 10 years. And in 10th year, if it is a reasonable growth and the sustainable projections, then we take up that growth rate and then accordingly do the valuation.
Now there are regulated entities, power plants, a lot of large scale, even who are free to sell their own power, or many regulated prices are there. In that cases, usually 16 to 18 years is calculated, because they say the life of the power plant can go up to 16 to 18 years.
Very true. So in that case, there is no perpetuity growth. No? There is a life of the power plant, and they are discounting the life of the power plant future projection to the present value.
True. That is true. It's an important point. But now most of the companies, like in transmission sector, they are saying initially the investors, they say 16 to 18 years. But by spending a little refurbishment and capex, not huge amounts, the life of the plant can increase to 35 to 50 years. It has happened. Particularly, there are companies on record like Sunlife Transmission. They have said they came with an InvIT.
Okay.
And they say it can really go up to over 30 years by spending a little capex. And incidentally, they multiply their cash flows, because initially cash flows for the first 16-18 years are considered, and then it is free. They can always get another customer and get a huge cash flows on very, very little investments and with very high ROIs.
Very true. Very true.
So perpetuity remains by keeping on investing, because latest technology is there, and these are sustainable basis. Of course, the other factors like available of raw material, emission control, pollution, etc. are there, climate changes. But today, technology and plants, particularly in the manufacturing sectors, have a good life.
Right. So that's why we said industry-specific knowledge and industry-specific requirement is also required to do the valuations. In that industries, as you rightly mentioned, this is how the transaction happens and the cash flow happens. So those cash flow has to be counted accordingly, and the valuations will be accordingly.
And can you give examples? You mentioned about 2 to 5%. We know generally there are many who take 4%. But on what basis and which companies, sectors is 2% and which is 4%, 5%? Are there some criteria, benchmarks used by valuers, or it is just subjective?
It is subjective. There is no specific rules or specific formulas to derive at that. Basically, it is very much subjective.
But 2
Ravi,
is for example, which sector, and 4 or 5 is for which sector?
No, there is no sector specific. It is again business specific. So this business, if it is growing that way, so I will give you an example. If I have met someone who is into hotel industries, basically, so he has a resort. So in first year they have made a resort of 100 rooms, and then they have expanded next year 50 rooms, and another next year they have a plan to expand to another 50 rooms, and next 2 years each, basically. So we are discussing that 5 years down the line you will have a 500 room resort by the formula. But the person said that I don't want, I want 247 room is my limit, and after that I have no growth plan. So I will be settled down in this resort with 247 rooms. So this becomes, so there is no growth after that. So if the businessman has a thought process and things like that, that he will be focusing on that, basically, that after 5 years his plan is like that. So it can vary over there. So there is no fixed formula, because we have to align it to each individual entrepreneur and business and how their business is going to run, and accordingly align that numbers to the growth, future growth. And
yeah, you mentioned about hospitality sector, hotels, and we have hotels. Some of the leading hotels, hotel companies are over 100 years. So effectively, this shows there is a very high perpetuity value. Effectively, only they need to keep on renovating and modernizing from time to time to have a proper customer and guest experience.
True, very true.
yeah, similar is the case. Sorry.
Yeah, Unmesh.
The point is, now let's do that. You have done a very excellent job of doing the valuation and everything. Maybe really more realistic and everything. Now, what happens if there is no such realistic things happen over a period of time? What is the liability of the valuer? Can you highlight those points also?
So practically, it's there's no fixed formula yet, or there's no fixed guidelines yet, basically, on the liability side of the valuer. But generally, the market practice is that the people think valuation is valid for 6 months. So within 6 months, based on the valuation report, if there is any deal or something is happening, so it can be applied over there. But after 6 months, if the model change, entrepreneur change, they lost their vision, they do the different things. So valuer, in my view, cannot be held responsible.
So do you do disclaimers in the valuation?
Yes, we have to do. We are bound to do that, basically, that we have done based on these assumptions and business entrepreneurs provided numbers and the business plan. So we are bound.
I would like to address the important issue, concern of Umesh, and also what Ravi you mentioned. And here it's a question of liability can actually arise when a stakeholder who is investing relies totally on the basis of the valuer's report, and then at some time a deep hole is discovered, and he feels his loss or a significant loss is due to the negligence of the valuer, right?
Yeah.
Because the valuer often gives the assumptions to the promoter, and the promoter can deal directly with the investor with or without the valuer's involvement. Of course, he can take further valuation, further insights of the valuer by involvement in discussions. But for sometimes the valuer can just give the report, and it can be used by any the agency who has taken the valuer's report. But one more vital point which is coming, Ravi, I think you will fully agree with me. It is not only the liability, it is a reputation risk. A valuer, when he does the valuation, it is not only the question of liability may arise, that happens usually only in terms of negligence, but the reputation risk is very important. the way valuer is done, the way valuation is done, the way valuation is also explained. And then people are getting convinced. And of course, the valuation is a dynamic game. It changes based on various assumptions and also from day to day, time to time. What may be a valuation yesterday may not be the same valuation on Monday, because some developments may happen. And again, valuation depends on the perception on the buyer or the seller and the need of the buyer and seller at that point of time. There are distress valuations. We have seen many distress valuations at the early stage of the pandemic and the panic. And there are exuberant valuations which we have seen in some of the technology and internet company, which we are going to discuss ahead, right?
So,
Ravi,
sir,
your thoughts, please.
I want to submit my difference of opinion on your first part, but yeah, fully agreed on your second part. The first part is liability for a valuer. It is very well established fact and clarified thing that price is different than the value. So price at which the buyer or seller or doing the transaction is something on their own choice and on their own decisions. Value is something which we are doing based on the compliances guidelines and the rules and the valuation standard basically. So these are the value certified, but again, doing the same transaction on the same price is nowhere mandatory, and nowhere valuer would be held liable for any deals on that basically. But of course, I fully agreed on your second part. It is more of the reputations than on any statutory requirements or the liability or penalty clause or this thing, interest penalty something. But yeah, more of the reputations, that how valuer are understanding the business and applying the realistic assumptions and arriving at a fair value. So that is.
Ravi, you are aware of any legal liability cases on any valuers in India and abroad?
No, not as such.
Ravi, one more point to add. If a promoter is doing a valuation from X person, and simultaneously the investor is doing the valuation of the same entity or some business from the Y person, and both the valuations have quite difference. So how the things will close? What as a valuer or what as a things will come to the conclusion? What is the formula or how this situation will be dealt? Because normally it happens. I will go with my valuer and you will go with your valuer. It may not be possible that both parties will be agree on the same valuer. May not be. So how will deal with the situation? What do you feel? What is your opinion?
Yes, sir.
Umesh, your video is on, so everybody is seeing you.
We cannot see, sir.
Yeah, Umesh, just put your video on for benefit of the panel and all the participants. That would be nice.
So I will answer while he start his video. That sir, you answered my concern of differentiation of price and value. So price and two different things. So there will be two valuer having two value, and ultimately what transaction happens will be the price. So two value will be used for the negotiation purpose between buyer and seller or investor and the entity basically, and then they can negotiate and come to a final pricing. So two value will have two different assumptions or two different valuation methodology. It can be two different financial model and business plan by both of them. Or if one person is investing and in an entity, he can foresee the future of this company as per his wish. Because if he is a majority investor, he wants this business to be run by certain parameters or certain future projections. He can do it differently. So after the investor infuse the money, the future projections may change. But the entrepreneur who is running the business currently was doing with this vision and this parameters, there could be a different valuation assumptions. So in both that cases also, the value may differ for varied reasons. So that's why there is no foundation on any of the value. The price can be totally different from either of the value. And as you rightly mentioned, investor and entity example, I would like to mention another example that in income tax also there is a authority with the income tax officer, because based on valuation, if there is any tax liability and capital gain has been arise or not arise or under valued or something like that, income tax officer has the right to do the reference to other valuer even after a valuation report has been submitted by the client. So client has to do again the valuation from the person who is referred by the income tax officer or appointed by the valuation officer has been prescribed in the Income Tax Act. For that value will be final for the income tax purpose.
Okay, so there is no such thing a mean, median, or something standard deviation, something like that formula used for this purposes. No, it's purely on a case-to-case basis.
Yes, yes. So case to case basis, again, of course, there is a reason to believe that if there is a wide variation, then only they should use this power. For income tax officer also, they should use this power if there is a reason to believe there is a wide variation, and then they are doing it. There may be subsequent changes to the valuation date of some assumptions or something like Manoj sir has given the right example. Before pandemic things were different, after pandemic things are different, and ongoing first wave, second wave, there are things are different. So in those cases, there is no statutory liability on the value, or if before pandemic somebody has valued based on such assumptions, and there are things beyond the control, and the things has been changed afterwards. So it can be very well changed.
So we're talking about the difference like between the two valuers as of the same date. Suppose say as of say 31st October, you value something as X, and the same business and the same assumption, somebody else values at Y. So possibly 10% or so is accepted, kind of.
10% is very much accepted, but still there is no formula that it should not be more than 10%. So I will tell you example. If I'm living in Mumbai in Mira Bhayandar area, and I have a meeting tomorrow morning at Churchgate. So Unmesh sir say that you will start at 10 o'clock in the morning and you will reach at 11:30 meeting. And somebody said you have to start 7:30 in the morning and then reach at the 11:30 meeting. So there are two different valuation of 3 hours traveling or 1 hour traveling. Which one is correct? I will say both are correct, because other person knows that I will not travel by train and I will go by cab, so I will take 3 hours. And Unmesh sir knows that I can travel by a train and reach in 1 hour. So it is like that basically. They're different of assumptions and different of scale of operations and everything. So that can be varied anywhere.
Excellent,
So
excellent
I try to answer realistically.
Yeah, it's understandable because the valuation is basically is a perspective of a person.
True.
Yeah, so it is bound to be different, with a different person.
Very.
Yes, any other participants have any other questions? I think Ravi, you have done an excellent job.
So
That
good
you-
point, sir. Thank you.
Well, now it starts.
Making it
Now
interactive
we
with us.
come to real life issues.
Ravi, hi, myself Kunal Joshi.
Yeah.
So I have firstly,
Mr. Joshi, can you put your video on, please?
one sec, I'm at home right now. One sec.
Yeah. Just may put your video on and mention your qualifications and experience also on the subject. That will be nice for benefit of all.
Okay.
And then let's have a practical interactive session. There are lots of actual valuation companies we'll discuss now, which are in public domain.
Okay.
Get
So,
maximum independent views.
So I don't know whether I'm visible, not visible.
Yeah. Fantastic.
Visible.
Okay. Hi. Good morning to all. It was a fantastic session. I think Nitin has done, Ravi, I think has done a great job making us understand on the valuation. Something
Just
about
mention about.
Yeah, myself. Yeah. So I'm there in this market from last 20 years. I was also part of Aditya Birla, but I was a part of the private wealth group. So managing all, ultra HNIs and lot of celebrity accounts and all. So presently, I also conduct a lot of, investor awareness program. I have trained more than 1,500 corporates in this. So that is what is my introduction is.
Wonderful. And your qualification you mentioned?
Yeah. So I'm basically a chart. I have done my BCom, and then I have done my MBA, and also I have done this course of like CWM, the Chartered Wealth Manager. Okay. So basically,
Wonderful. Now let's discuss on valuations. It will be interesting.
Yeah. So I just want to know today if we see like particularly my question is pertaining to this index. Okay. For example, if we take this PE of the index, which was last January 2020, it was around 42. Okay. But if you see the trailing PE, which we can see it around 26 or 25 at this particular time. So what do you feel whether we are, whether we are, going in on a discounted fee, or how does the valuation, which you basically understand on this?
So good question, Kunal. But yeah, sorry to say, I will not 100% comment on this because I'm not a stock market expert or things. I'm a registered valuer and largely do the valuations based on the given parameters and guidelines. I covered this presentation largely on the DCF valuations. But yeah, of course, I've covered two real life examples of Zomato and Paytm and tried to link with valuation parameters. Stock market is something which works. The valuation works in the stock market is really different. Our mostly in the fundamental side, the stock has technical aspect to it and largely the sentimental aspect to it also. So we have no formula to predict the index as such, the valuation of index as such, that how it will be technically move or emotionally move by the people's sentiment. So not covered. I'm not to comment or answer to your questions. Yeah. If I find some answer to this, I will definitely share to you offline. I will.
Sure. I have shared my number.
I would just supplement because there are many investors who look at the benchmarks and the media headlines, but market looks as valuations as expectations of the company's cash flows in the future. And this trailing piece you mentioned are historic numbers, and historic numbers are getting affected by abnormal factors which has happened in the particularly last couple of years, are pandemic issues and new policies and coming. And also PE is only one of the criteria, yardstick used for valuation. There are multiple criteria, like in loss-making companies like Zomato, which we are going to discuss at length now. We will discuss Paytm and other companies also. Anybody can throw insights, Policy Bazaar, Sapphire, etc. So they are loss-making companies. So there is no E, so there is no PE. But the various yardsticks are used to derive at valuation. So there are various techniques, expectations, perceptions. So it's a dynamic game and lots of excitement and valuations, and it is.
Okay. No, my question was basically, not considering. I'm audible. Hello.
Yes, Kunal, you are audible.
Yeah, sorry. My question was not pertaining to any particular stock. My question was particularly considering the index. Okay, that was my question. But I think Ravi, basically he looks after the fundamental valuation and all. I just wanted to know something on the index, and my question was very simple. That on January 2020, which I feel the valuations were very high because Nifty P was at 42, and similarly if you take today's Nifty P, which is it's pretty discounted, which I feel between 25 to 26. So I mentioned we generally interact with a lot of people. Everybody out here is say valuations are high, where to invest, how to invest, and all. So the question was pertaining to that particular thing. But anyways, I have shared my number, and if you have a group, you can add me on to it. So Krishnan is a dear friend, and he only routed me through years.
Yeah, fine, good. He will connect you and give you further details.
Thank you so much.
And good to have you regularly on the platform and share your insights and queries.
Manoj, Milan Shah here. Can I have a query?
Yeah, sure, Milan. It's really wonderful, and it's nice to see Milan, rich experience in corporate and airline sector, and very, very avid watcher of valuations and capital markets on a daily basis, practically.
Yeah. Good morning, Ravi. I have a query for you. Hello.
Yeah.
How far is it in case of property transaction? It is mandatory to get a valuation certificate from a registered valuer. Suppose I am having a flat selling in, say, Metro City or something, and I do it at a ready reckoner value. do I still need to do a valuation?
Yes, because what happened, the capital gain will be arrived at based on the valuations, what is the fair value as per the registered valuer, and on what date you have done the transactions, the difference of that, if any, would be taxed accordingly.
So is it mandatory? Huh?
Yes, it is mandatory.
Even if I do it at the ready reckoner value, I mean.
So ready reckoner value is accepted on the stamp duty and registration charges. So that value will be accepted over there. But there is always room for income tax department to raise the question that if you have shown this much of value as a capital gain or loss, if any, to be set off, which is not at per fair value of registered valuer. So then differential amount they can ask you for taxed accordingly.
Okay. Okay. Thanks.
All right. Thanks, Milan.
Yeah, this exciting story, Zomato.
So I have covered briefly about this Zomato, that how fundamentally we see the value over there. Not a detailed story, but I believe my time is also getting over.
No, you have unlimited time because everybody is looking at some practical issues. Zomato, Paytm, what will happen on Monday, and people lose 25% just on in a few minutes on technology-driven platforms,
So yeah, so when we divide this valuation, fundamental, technical, and sentimental, so it's all sentimental thing that, in the market in few minutes people are losing or people are gaining. So,
real money is being made and real money is being lost. So when sometimes people say it can be a bloodbath also.
Right.
And the amounts are huge.
Very huge. So I've tried to summarize the Zomato related things. We have seen the date of listing of Zomato was 23rd July 2021, and it was listed at a price of 116 rupees, whereas the issue price was 76 rupees. So there was a gain on the listing day itself of 52.63% for the investors who had applied for the IPO in the Zomato shares. It was subscribed 38 times, and we see the market capitalization on the listing day itself went to $12 billion for Zomato. Whereas we as a valuer see the valuation which was done lastly in February 21 was around $5.4 billion only. So there was a sudden jump on the valuation. It was raising a lot of question on the valuation, that whether the valuation has been right or wrong, or whether the valuation has been so undervalued and actual value is very higher. So things like happened that. But then we try to see actually how it happens and why it happens. What are the key points for Zomato for justification in terms of increase in the value? So we've seen that it was started in 2008, and which was the 13 years of commitment and dedications for the Zomato business entrepreneur. It was into the India's food service industry, which is at $670 billion. And 90% of it is unorganized. So even if we take 10%, which is organized food service industry, wherein Zomato has its play, which is come to $6.7 billion. So out of that $12 billion valuation, it got 18% market share of organized market. So which is very different and very compatible in the Indian market, because in food service industry there are very few players and there are not much competitions. Zomato has an early mover advantage, so it has expanded its business into very large scale, having a 350,174 restaurant partners and 440,000 delivery partners. So this large scale mitigate the concentration risk of business, and which gives it a scope and room for the high valuations. It was also recognized as the best Indian brand, and which shows the trust and customer loyalty for a long-term sustenance. And it is started with a food delivery app, expanding business into grocery, dark kitchens, and others. So there are so many other things of business which also focused by its entrepreneur, and probably that may be the reason that overall this valuation goes up, because it has a lot of room. It was a good business plan at a large scale, and good promoters focusing on the business. All this can add up to its value. But then the question comes, why the valuer has given a low valuations before the IPO. So again, that can be seen from a different perspective. And it listed on July, so 3 months before the country was not having the second wave of COVID. The second wave of COVID comes, and then it affected. So there can be probably many reasons to it. Basically, we cannot pinpoint exactly, but as we have discussed so far, the valuation principles and the valuation guidelines. So valuer can have a different value, and the market can react differently based on its sentimental nature. So
one
that was,
important point in Zomato which is coming in the offer, there is money left on the table for the investor, whether the anchor investor, whether the HNI subscriber.
the voice has gone, sir.
Who basically follow the anchor investors, and of course lots of opinions and views available in the media. They don't have access to financial models. Often anchor investors, they get financial models, business models, which should be shared openly as per the SEBI norms, KK Mystery Committee.
Okay. Again, the voice is distracted a lot.
Put money on day one and continue to make, and after that also it is significantly gone up, and there are research houses which have been still recommending the stock at the current valuation and giving higher targets, as long as the company has a scalability and sustainable business threat. They have a good market. Of course, competition is there. Swiggy is there, but it has very, very high branding value, and that sentiment also is created in IPO through discounts and all that. And discounts came to the product pricing, not to the share pricing, which incidentally would anybody else like to share any thoughts on Zomato and internet companies? Please turn on your videos and identify yourself.
Yes, sir. So basically,
Umesh, your views on Zomato valuations, your concerns, or you feel Zomato is a great story, and Zomato is going to different countries also. It's a matter of pride for India. A fantastic story with very, very low employee cost.
so basically the point
An excellent delivery platform at low cost. I think below 20 rupees per delivery, right?
Yes, yes. See, what I would like to point it out over here is there is a cultural change, difference, rather the total change has taken place after the COVID, and the culture has developed that people are more prefer to take the delivery based foods, taking the delivery instead of going. What are the concerns are still today as far as COVID is concerned? So habits have been getting changed over a period of time, and that has created a lot of advantage to the e-platforms. Maybe it be a delivery-based platform, Zomato or any other companies, or maybe other grocery shops who are coming on giving e-delivery or the delivery on door. Or maybe there are so many other players that came up. This is an advantage by natural calamities. What you can say, these are natural calamities that have been faced, has given a boost to them, and that has added an advantage over Zomato getting the good additional benefits over here. That is what one thought that I am looking for. Secondly, if you see the employment growth that has been created because of these low cost delivery charges, so many unemployed youths, or rather not only unemployed youth, there are part-time people, the people who doesn't have the sufficient earnings from their one source. They are trying to exploit this as a part-time job. If you have a bike, yes, you joined as a Zomato delivery boy. There is no need for rather there is the concept has been getting diluted that आप डिलीवरी का काम करोगे तो आपका वैल्यूएशन आपका खराब हो जाएगा, ऐसा कुछ नहीं. People are accepting that also. Yes, it's a earning source. So people, a lot of people, even good people, maybe graduates, undergraduates, or even good qualified people are also doing the part-time job or making an additional money. By even doing 10 deliveries or 20 deliveries in a day, you can earn 300, 400, 500 rupees. It's a big amount of almost earning more than 15,000 rupees or 20,000 rupees in a month. So such plans are there in the minds of people also, and that has given them good boost to one way the valuation of this realistic valuation of the Zomato also, or giving them good acceptance in the market or in the society also. This is something what I feel has been a boost for the Zomato also. Yes.
There are two things coming here. One is a very successful execution of a fantastic platform. They have made it successful. Another thing is there are global companies, US, China, which have got much higher valuations in the platform delivery platforms, and Zomato and Swiggy can also further scale up, but continuity and sustainable execution and excellent technology, because even a small failure can create a disaster. And today we have seen is Zomato has got money from the investors for investing in the business, technology, and also acquisitions. And it has started that seriously. It is looking at various other businesses and trying to rapidly expand the scale. And Zomato has created a huge number of millionaires through its sweat equity and happy investors, happy employees who have worked on it. And it is thanks to the dynamic valuations with the investors, savvy investors, which include retail investors have become savvy. They know where to invest and they know where to also get out or raise the red flags immediately on much faster than it was happening before, thanks to internet, which works at 24/7 by 365. Any other thoughts? Please to share.
Yeah, Manoj, I think let Ravi finish his presentation, then possibly we can discuss other points.
It is relevant point on this slide only. So I think my point to add on into it, basically as a number, we see the food service industry, which is 670 billion, and 10% of it is also 67 billion. So whereas 12 billion valuation is still having a room to further grow. So that's why I will add on to it the point. Actually, it is really a good business model and a large scale of operations, which can give it more room to further expand. So if there is any more point on Zomato, we can add, or otherwise
I thought Zomato. Then I got a couple of points. The point number one is that it was one of the very few issues where the promoters have not gone away with a lot of money. In the Paytm case, out of 18,300 crore or so, the promoters have, or investors have gone away with 10,000 crore, and the company has got only 8,300. Coming to Zomato company, the issue of 9,250 crore or 9,300 crore, only 300 have gone to the investors, and 9,000 crore, major chunk, more than 90% has gone to the company. So the company has a lot of cash, to expand the business. But what's happening is they are now going into different businesses. Like say they were going into the delivery, grocery business, and nobody has made money in the grocery business. So people have not given money to Zomato to go into grocery and a thing like that. It is for expanding their food delivery business, which, as you said, is a $670 billion, the potential. Now, comparing with the American scenario or Chinese scenario, somebody had given some figures that in US, the door delivery or DoorDash, DoorDash, I think, DoorDash, that app, DoorDash. Their average order size is somewhere around $28 to $30. And in Zomato's case, the average order size is something like $3 to $4. So unless the order size increases, the earning, may not increase, because your delivery cost and other promotion, this business promotion, marketing cost, even if you increase more number, by simply increasing more number, there may be some effect, earning of the profit, maybe your fixed costs get distributed. But the real crux lies in increasing the value per order. Same like we talk about in telecom, ARPU. So here, the big challenge for Zomato is really, I would say, increasing the value per order, which is around $3 to $4, around 300 rupees. And going into other businesses, I don't think it is positive to my mind. Because if I'm interested in other things, I have got other companies to go for. So here is he's a dominant player, one of the two players. He's a dominant player in the food delivery, and he should think and expand in those areas and the related areas. Yeah, that's what I thought, sharing on Zomato.
Thank you, sir.
Good points and insights on delivery order size. And Zomato has a huge potential to scale up on the order size also as more people get used to it and increase the appetite based on faster delivery and getting warm food at a timely manner. Krishnan, your thoughts on Zomato before we move to Paytm?
Just to add on to Mr. Dushyant sir's thought, to my knowledge, please correct me, I could be wrong. They are getting into grocery business just to exploit the synergies and to avoid the vacant time of the riders, which is one of the biggest cost for them is the rider cost, the petrol cost. Okay, so what they are trying to do, from what I understand, is they won't be having any inventory of groceries. They are just they are planning to have tie-up with, say, it could be a small grocery, or today there are a lot of grocery tech companies. So they are planning to exploit the driver idle time to use it to the optimum and work on some fixed fee-based model, so lower their operating cost.
No, but driver cost is always the variable cost. It is per order basis they give. It's not like a salary. They don't give a salary to the driver. It is always on an order basis.
No, correct. Again, I could be wrong here. Some drivers are on payrolls also. Some, of course, they work on variable models also.
No, very few. Most are on variable model,
Most
and I would add here, and it is not on downtime because the new business would be having a totally separate vertical and separate delivery people. And also one more point which is coming in, you mentioned petrol. Now it is not only petrol. Now there is a huge migration which is going to happen to EV also, which has much lower running cost. That can even boost the contribution gross margins of the Zomato in the particular vertical. But main thing is it will be a new business, so getting the act right, execution is very important. And there are other companies which have the first mover advantage, so it will be a late mover, but it needs to scale up and live to the expectations of the higher valuation and even much higher targets by some of the top research houses, including Goldman Sachs and others.
Okay.
Yeah, Ravi, your thoughts on all this? How do you react?
Because that is the key to success, the holistic business model, with a proper, well thought of and very strong for future. The company keep on adding, I believe so.
Big Basket is now scaling up, and now Tata's have taken interest. So there's going to be lots of excitement. Even GeoMart, a D-Mart into the delivery game. So lots of things are going to happen. It's going to be very competitive. It's not an easy game. But fire in the belly of promoters, Zomato, Info Edge, which has been promoting a slew of IT companies, is becoming very interesting. And so much of wealth is being created. That's really exciting in the Indian companies with Indian brands. and market cap going up, ultimately we see a day when these internet-based companies will be a part of the Nifty and Sensex also. It's not there, it's far off, and there'll be much larger investments in the internet sector. Most have been driven by top Indian professionals. They are CEOs of top US technology companies, and also they have created value for the global investors. But now coming on the Indian exchanges, Indian promoters, Indian employees, suppliers, part of the execution chain, supply chain, delivery. It's really wonderful. Yeah, can we come to the next one? Paytm. There are lots of interesting companies, lots of interesting developments. Yes.
Krishnan Iyer has some question. He has raised the hand. Please, Krishnan sir, please.
Now, just to add, recently, I guess I will circulate this article if possible. Business Line had come up with a note that probably Uber is a value for money buy, because Uber has Uber Eats and valuation. The sales of Uber Eats are far, and apart from that, Uber has a lot of other niche businesses also, where it's in a virtual monopoly. If possible, I will try and share that article. I guess I had discussed this with my good friend Kunal Joshi.
Yeah, we can take up in the future series also.
Yeah,
Uber, Ola, Airbnb, lots of developments happening.
Yes.
Lots of developments happening. Oyo rooms. In fact, people are talking about, you mentioned about Uber, Ola, there is lots of planning, pre-IPO planning, lots of changes in the management and trying to get the act right. So valuations are going to be dynamic, and watch the space, watch the financial modeling valuations. And Ravi, I hope you will be tracking the sectors and companies closely and coming regularly with a series of interesting valuations through deep dive in models, business plans, right?
Yeah, surely we'll try. We'll try to cover as many as possible in the coming future also. But only thing is that we always feel too much of differentiation in our way of working and valuing and seeing the valuation, and actually the market behaves. So that difference will always remain. But of course, we can deep dive and try to analyze from various aspects the valuations.
Markets are dynamic, professionals are dynamic, and those who are not dynamic, I think they are getting to learn to be dynamic and lead the India growth story.
Exactly.
The stock market is like a sentimental valuation, so we are not to worry on that. We are professionals, so we'll stick to the basic fundamentals only.
Everybody needs to worry on that. Because that's the scale of India in the top 5 and top 4. It depends on the market. That's where the investment comes on, and that pays for the investment in capex, working capital, market development, business development, and paying for the professionals also.
Right. That's actually adding to the India growth story.
Yeah, and finance is in the blood of all the professionals and business, so they can contribute their cutting edge, deep dive knowledge and experiences to see that the valuations are dynamic and on the go. So we get maximum money in the India growth story on a sustainable basis through ethical promoters and ethical practices of investment bankers and professionals also.
That's the right objective. Super.
But the objective is right, but does it happen that way? Is it happening that way? Everybody is meant to maximize their gain. Nobody thinks about India growth story and everything. That is only for the making presentations. But they normally do what is beneficial to them. Otherwise, this Paytm story would not have happened.
That's Arthashastra has said. Now we'll do a deep dive into Paytm, from the basic to the advanced, and what happened yesterday, and what is going to happen, and all stakeholders' expectations. A proper 360-degree view. Yeah. So what does the basic number say?
The basic number of Paytm, we see that day before yesterday, 18th November was the listing for the Paytm. Listing day closing price was 1,560, which issue price was 2,150. The gain in listing day itself was 27.44% of loss. Though the IPO was subscribed more than its overall value, 1.89 times it was subscribed. So we see the market capitalization on the listing day went to $13.5 billion, whereas the IPO was valued at 20 billion. So there was a loss on the overall valuations. Before the IPO also in November 2019, the company was valued at $16 billion. So the listing day, the company went 2 years back, less than the 2 years back valuation, which is less than the $16 billion also.
So come to the slide. What the slide shows is a very, very clear loss in mark to market. Mark to market. It may not be a real loss. People may not have booked the gains or losses of $6.5 billion US dollars.
Yeah.
On day one at the 3:30 p.m. prices as close of market.
That
Right.
is almost
Listing was at a discount to IPO. It continued. There was sustained selling. There was a thought by some investors: if it has fallen, shall we buy? Will it go as per the near the IPO price today and move up later? Because anchors have invested at the peak valuation of $20 billion, right? And the names are out before the third day. So HNIs know how much of quality investors or the reputed branded investors, whether mutual funds or FIIs, anchor, they are known to be savvy investors. They have access even informally to the business and Excel models. They deny it formally because it needs to be shared with all, but $6.5 billion, the price did not recover, and there were huge media interactions during market hours, and apparently there has been perceived to be lots of media goof-ups. Instead of recovering, the prices has further falling, and over 25% fall on day one is very, very interesting, and it's not a small amount. The size is important, 6.5 billion. Another point which comes out from this, IPO subscribed 1.89 times. Now there are two factors coming. One is the number of times seem very small because there are other IPOs which are over 100 times, 200 times. But people say the size of the IPO is small. So you have over 100, 200 times. Here the size of IPO was large. So a little benefit can be given to the investment bankers and the company. In spite of a large size, they got 1.89 times. But the retail subscription was much lower than expected. And ultimately in this companies, retail investors have proved to be much, much smarter by not going totally way out and subscribing in higher multiple times, because otherwise they would have got higher allotment. So quite interesting. Let's have more slides. Lots to discuss on what really happened and what is going to happen.
Sorry, the net connection was unstable. My slide is visible now again.
Yeah.
Yes, sir. Yes, sir.
Yes. So when we started looking into the deep diving into the analysis, the favorable factors are that the Paytm was also launched in 2009. So it's a good number of year of standing in the market. It has a 40% annual growth in the gross merchandise value and 5% operating margin, which shows a sustained year-on-year in future also. And revolution in use of e-commerce and online services is a positive factor and a boom to this industry. And Paytm has an early mover advantage in this space. They were already in the market even before the pandemic period and flared well during the pandemic also. To my view, the challenges which can be maybe undermined is the distracted management. Digital payment till Soundbox was superb, the company's growth story, but then they have diversified into equity trading, derivatives, and insurance, etc. So which can be shown the distraction of the management side, that whether they are focusing on a sustainable basis for a longer run in the future in this business or not can be a question mark. And founder selling shareholders in DRHP. So I've covered that. If we see the abstract from the DRHP of Paytm, page number 34, we see these are the top shareholders which have already announced that they would be selling their shares in this IPO. In fact, they've already sold. Whether this price has been gone down on the listing day, they are indifferent. So they have already, because the IPO was successful, they got their share selling approved in the IPO, and then accordingly will be taking their stake back and money will be withdrawn.
Yeah, and this is a very important slide which clearly shows some of the early stage investors like Safe, average cost of just 15.4 rupees. They have made their money how many times?
So
over
they-
100, over 100 times.
150
And
times. Yeah.
even Alibaba, which people say has Chinese promoters, of course, from other nationalities also, huge, got over 100%, over 200% returns in a very, very short period. This shows a huge potential for wealth creation in the platforms market by savvy early stage investors, even at a late stage, who actually take the risk, understanding business without only looking at the current or trailing ease, and looking at the potential to perform. It's quite interesting. The average cost of acquisition per share and huge money created by the sellers who have sold at the right time. Of course, all they would not have sold all day holdings, but still they are at much lower cost than even the current market value, except a few where I think it is mentioned they got at average cost 1833 rupees, right? Mostly, but they are informed people, they know what is happening. They are long-term investors and they have bitten the bullet, and quite interesting. There's lots more on Paytm. Let's have the next deep dive insights.
So even this at 1833, they got an exit at IPO at 2150 is a decent return for them in the shorter period, because they were the late investors, and exited at 2150 in the IPO, because IPO is already
Have they sold all the shares, or they are still holding some of the shares?
No, practically to my knowledge, this they have already announced in IPO. So the IPO proceed will be used to pay them and buy back the shares by the company. So this
Yeah,
IPO
but have they
proceed is
sold
already with
100%
the
of
company.
the shares, or they have sold only part of the holding and retaining the part of the holding?
Need to check. I have not tracked that exactly.
So they have made
I
money
believe
on
that
the
would be
portion they
more.
have sold. They have made good money on the portion they have sold, and
Yes,
on the portion they
the
are
majority
holding,
of the
if
portion,
any.
number of shares are mentioned. So this shows the majority of holdings they have already been offered for sale in the IPO.
But actually it depends. Many show sell only a part of the holding, and
Yes.
some say because we want to list the company and get market discovery, so they sell part of the holdings which are required for listing purpose.
Right.
And of course, 10,000 crores of the company's funds has gone to the company, of the IPO proceeds have gone to the company also for their investment plans as per the business model they have specified. And quite interesting, the founders cost per share 0.5 is 50 paisa, right?
Yes.
50 paisa, that is the cost, and still the promoter has been laughing and dancing at various occasions. Not only on Friday, when listing takes place, he was so happy, so many smiles on the faces, in spite of battering in the prices. But it has been a great day for the promoter to get discovery of his prices. And there was also intimation that he is not a promoter currently, because there is huge investments now by different stakeholders, but he is of course an important stakeholder. Now, one important factor which is coming in, what market is concerned with, they are talking about the China factor. Maybe because of the names of some of the investors, Alibaba. So would that boost the company? But the company has been going from strength to strength. If you do a deep dive and travel across the country, then you will see even the person selling coconuts on the street without a fixed address. They have you scan the your Paytm for making a payment even for Narel Pani, which you get for a few rupees.
So in fact, that job is wonderful to spread across the various locations and areas and reaching toward the people and giving them the good tools, basically, which is a digital tools to use them and help them grow their business. And if you have to still be optimistic, there are optimistic things that if they continue the business growth at a 40% and 5% operating margin rate, this can be sustainable. There may be listing days loss, maybe temporary, maybe recover up. We don't know. This is a separate thing in the market. But on a long run, fundamentally, the company can keep on growing. The owner is not so distracted in the various lines of businesses and focus on continuously growing the business. So the potential which is there and which has been come out in the valuation reports also can be fundamentally good and can be sustainable on the long run. But of course, this can be seen holistically in all other things also. Because what happened in the market when it comes, when the company is foraying into the different area of business of insurance and the stock market and all, and who makes this IPO successful? All these stock brokers and all that only. So if those are having a negative view on this, that can be an impact on the market negatively. But fundamentally, it may or may not be differing the company's future plans and growth story.
Ravi, I have a slightly different take on this Paytm, going forward.
Yes, please.
Yeah, what you are saying is that they are focused on their business, but the market perception is they are not at all focused on the business. For a simple reason that they were, even if they had a first mover advantage, and Paytm became a household name, like as you said, all hawkers and everybody on the street, becoming this digital savvy was something great. But then once this UPI came, when the UPI came in 2016 or 17, I think 17, then what they were making money on the payments of aggregator. That money, the government, the Reserve Bank said that nobody can make money in the payment processing. So that is how their revenue stream was, profit stream was affected. Now going forward, they are going to go into all these assorted businesses like say insurance, stockbroking, these airline tickets booking and all. Now each of these businesses is a very strong competitor and they are already late in those businesses. If you name anything like say your insurance business, then a Policy Bazaar is there, right? Now if you are talking about say Zarotha is there for stockbroking, and Upstock and other companies have come up. Even the grocery also, there's so many companies already there. Now coming back to their main business, payments processing, there got a lot of competitors like Google Pay, like Phone Pay, like even WhatsApp also now doing the payment processing and all. So if in their own business, they are not holding on. They are not holding on to their market share. So how, in a digital payment, they have got 40%, but then others are also now, moving up on the ladder for the market share. And who will compete with Google Share, Google Pay and Phone Pay and a thing like that? So I think he is in a total storm. I would say in a storm. It is not on the shore also. He is now entering into a storm where everywhere there are more competitors than he can handle. And the fact, as you have shown, that even the promoter has been shown as selling shares and all. So, its overall impact is negative. This 1.89 times subscription, if you analyze, then number one, no mutual fund is applied. Because of some reason, all the mutual funds have stayed away from applying. Number two, HNI quota. HNI quota was only subscribed 0.24%. Only 0.24. Whereas the FII institutional portion was something like 2.4 or 2.5. And retail as usual, without understanding, they just want to, it is their greed. Retail people don't understand much, but they want to go and make some, listing gain. So they only have helped this issue to come to this 1.89 level. And now they are suffering. Because last 6 months, if you have seen the issue after issue, the prices are going up 3 times, 4 times. So retail people thought it's a very easy way to make a listing gain, and that is how now they are caught. So the greed, everybody's greed, the issuers' greed, the investors' greed, the retail investors' listing greed, all the greed come together, and now we have got this disaster. And going forward, this issue is going to affect so many other issues also. Because yesterday, I know quite a few people bought this share around 1700. Because the issue was at 2150, they thought around 1700 is about 400 rupees down. So now it is safe to get into it, and they ended up losing another 200 bucks. So now everybody want to get out of this. So now even if if there is a view that the market price will recover, maybe eventually after 6 months, 1 year, it may recover, but it will recover after hurting so many people. If I have bought it 2100, I may sell it at 1500. You may buy at 15, but say when it comes to say 1300, you may also sell. So somebody who buying at 13 might get when it goes up. So the same person is not going to get. So there's a lot of bloodbath and loss will be there, and those people who have taken money as a margin money from banks and all, they are the biggest sufferers. So let us see how the things move on next week at least.
Ravi, can we connect to this point with the valuation? Is it the failure of valuation?
Exactly.
It's a greed, it's a greed. Everybody wanted to exploit this bullish sentiment in the market.
No. I'm talking about the real valuation. When the IPO is priced, basically there has to be a proper valuation been done when your IPO is valued. So based on that, whosoever done the valuation at the promoter's level or at the company level, that valuation has gone wrong. Have they not really valued it properly? Because there is an offer price, there is a bid price between what are the amount, say 2000 or whatever it may be.
But that is, see, as Ravi explained, there is one thing called value and there is one thing called price. Suppose valuer would have done any XYZ, the promoter wanted a particular price, the investment banking advisor, they advised the particular price. So the price is different than the valuation. And even today also, if somebody was bought at 1700, he thought it's a good price. He has also failed. It has come down to 1560. So valuation is one thing. The price people are willing to pay or willing to extract is another story.
As per the decision in the Hindustan Lever Tomco case, it is very, very clear. Once it gets listed, the listed price becomes the valuation. Very, very clear, accepted norm. The listed price becomes a valuation, and it is very, very dynamic. Now, several important points which come out from so many inputs from participants and a panel is now it got listed in India, NSE, BSE. And what happened on day one? One was the numbers given, the subscription from HNI was not as high as expected. So leverage multiples of investments were quite low. And there is also, it got chose to get listed in India. If it was listed on NASDAQ, would the story would have been different because their valuations are much more. Also, like another company now, Book My Show, is one of the associate company of a listed company. Now various options are being explored whether to get listed in the US market or to get listed here. The difference in valuation. Another point which came up is how the media anchors from a listed companies, media channels, they are trying to corner the promoter and the CFO. And also another anchor from the same media is doing tweets of various companies to try to influence the price rather than share the actual facts, how they are trying to influence the price. there has been a very most controversial interview on how Mr. Vijay Sharma and the CFO, Mr. Madhur Diora, got cornered, and ultimately media tries his own way by provoking them to get something out through their body language and what they share. And although Mr. Vijay Sharma has been very articulate in a smiling, cold, calculated way, he is very savvy. The way he has interacted with the media, he has tried his best to convey whatever is allowed as per regulation about the business model and the type of valuations given by getting opinions by savvy investors who are putting their money on the table. But there is also one interesting point which has come out, how the CFO was cornered. And the CFO, it is indeed shocking the way actually he was cornered by media anchors, which one can see by tweets. And it is all over. It will happen on Monday also. How a CFO says he has not read the valuation report of one of the marquee research houses, which is known for issuing provocative research reports to get noticed. Their valuations or target prices may or may not be reasonable. For there are 50 reports, maybe one adverse report, how the media is using that to corner the CFO and the CEO. CEO is very articulate. He answers properly. He also says we are growing at a fast clip and very soon the numbers will be out. We talked about growth rate. Ravi, you talked about growth rate. Numbers will be out, I think, sooner than a market is expecting. So people know the growth. But how a CFO, isn't it shocking how he can say he has not read the report of the research house, whether right or wrong? But if he says not read the research report, this is shocking. They are paid to read. They can't ignore what the whole world is looking at. He may or may not agree. And most of the research houses, also their processes, they share the report with the company, they ask them to respond. And the company may or may not respond, but you can't just, CFO can't afford to say, he may have his own view, but he says he has not read the report. And it is a report which is circulating all over. Of course, he can say they are not interacted because there are today hundreds of research houses doing their reports, some on the sell side, some on the buy side, some are vested interest, some are into investment banking, some are not into investment banking. There are different reasons, but it is a failure of the CFO. In fact, he's welcome to come and share his thoughts very clearly on why he has not read the report, and if he has not read the report, why doesn't he take out time to read the report, and how he can afford to say he has not read the report immediately after he said the share has gone further down as it was shared. Some people have bought at 1700 odd, but after a CFO makes such a reckless statement, of course it may be based on provocation by a media anchor, but you need to get the facts right, what people are talking about, the various risk factors, challenges. I think the challenges was there also in the earlier slide, right? Opportunities were there, the challenges, there are much more challenges. So the company needs to understand the challenges, what are the different stakeholder expectations, and then how those challenges can be overcome and articulated properly. It used to happen in a Reliance Industries case also, where Credit Suisse issued a negative report. And the company stock price did not go up for many years, but ultimately it articulated very well through his strong IR division. And then you had multiple positive reports which explained the growth story, and it got some of the best investment in the country and from some of the most savage investors. And that platform is also meant to list. Another aspect which media, which actually many stakeholders are talking about, we talked about WhatsApp payment, we talked about Google. Jio is not an insignificant player, although a late entrant. Today, Paytm is not only payment space, it is not only on a stock platform or a mutual fund platform. It's not only a payment bank, it is also a significant contributor to the Amazons and Flipkarts. So, and got strong investors to back it at every stage. There are several stages, life cycles Paytm went through. Paytm will not go up over 5,000 crore valuation, over 10,000 crore, over 15,000 crores. It grew today, IPO valuation of $20 billion. It is also a significant competitor to Amazon and Flipkart. But Jio is very, very strong muscle power and also very strong influencer in political circle. So that factor will also come into play. But Paytm is a very, very strong platform. They need to understand from the challenges. The CFO has to have much more learnings from the market. It's a learning. Every promoter learns from the market. That's how sustainable wealth can be created. It is not just a mark to market at the 330 price. So even at the gray market, which is a totally unregulated market, unfortunately, but there also the prices were not coming correctly, and it had failed to get good gains which people expected on listing. So many factors are coming, and it's very interesting to do a excellent 360-degree appraisal. In fact, we had several sessions on Paytm. In fact, the many participants, panelists spoke about exuberance and the price in the RHP after a deep dive of over 500 pages of the RHP. And now what happened on Friday is really, really interesting and exciting. And we hope some sense plays on Monday also, and much more information comes out directly from the company. And maybe more reports will be available. Also, the company needs to get its IR right. It's a total failure of IR, and also a significant failure of the CFO in articulating his views on IR is to be managed, and our stakeholder expectations are to be managed. Of course, Vijay Sharma has been doing an excellent job. Hats off to him, and a wonderful job to Vijay. And I hope he creates a much significant value, even a multiple of over 5 to 10 times in the years ahead. Any other thought process? Feel free to articulate. It's really wonderful. Deep dive, 360-degree view on each and every aspect of valuations.
Just an
whether
interesting,
whether value, whether price, whether numbers, whether investment bankers, regulatory aspect, global factor, US factor, China factor, India factor, competition, rival, platforms, management.
I will share just a couple of numbers which I got in one of the WhatsApp posts. Number of retail investors who applied in Paytm IPO 10 lakh. Number of Demat holders in India 6 crore. Number of Paytm customers 34 crore. And number of people upset after the fall in Paytm price 100 crore.
Very interesting. It's all in the numbers.
Yeah,
but 10 lakh investors, 1 million investors.
See, out of 34 crore Paytm customers, say only 10 lakh retail customers have applied. So I think people were not enthused to apply for the share from the beginning. Like I've been applying in so many public issues. I've been applying in so many public issues. I have not applied for Paytm because of the steepness of the price. You know, whatever you say is a very nice platform. It is a, a revolutionary platform. I agree everything. But when you come to the IPO price, it has need to do with the valuation and profitability going forward. You know, when you are talking about investment bases are profitability and scaling up of business. But somebody's efforts, if somebody has good efforts, I will appreciate. But I cannot invest on the efforts. I will invest on the results.
Sir, I will add one point over here, special point actually, and also to answer you and Unmesh sir also were asking earlier on the valuation side. Basically, I have seen try to research on this valuation of this Paytm. I have not seen DCF valuation. So I have not found the DCF valuation. The valuation has been done for this Paytm is all for different methods, the comparable cost methods, and the companies of the foreign companies who are having value of X number of revenue and multiple of the revenues and all, but not exactly the DCF valuation. So when we are talking about in today's session of the DCF valuation, when we deep dive into the business and see actually how the business is growing, that valuation is not available. So probably that may be the one of the reasons that itself, whether it has been not done intentionally or not, we don't know, and we cannot comment right now. But yeah, that is the real challenge. Apart from the all other challenge, that is also the real challenge. Before I conclude my this Paytm topic, I would like to mention that also the DCF value has not been made available for the research and study.
And Ravi, talking about the valuations, see, like most of the issues you would have seen, those who have done well in the market, say like Paras. Paras was somewhere around 160 rupees, and right now it is quoting in the market around 700 rupees. So it has gone something like 4 times plus. So definitely, there somebody can argue that why the valuation was on the lower side. Similarly, recently also a couple of issues have been listed, and there the prices, about 3 to 4 times. In a happiest mind issue, also everybody knows around 450 or 500 the issue came, and it's gone up to something like 2000. So partly it is valuation, but more than valuation, I would say it is the the view of the promoters, that what really they feel that the market is considering as their business model, that they are willing to pay. And second thing is the liquidity, which is really also playing havoc in the pricing, in the market pricing. So because of the liquidity, even ordinary shares or reasonably good shares are valued at such a premium level. You cannot hear of shares going up to P of 200, 300 and thing like that. So I think even in the market also, the investors also are, I think, greedy at the moment, that any price they will buy, it is going to go up. So this Paytm correction, I think, has brought a lot of sense in investing, activity on various angle with the various investors, be it retail or be it institutional or anybody. This particular, disaster is, now opening eyes and asking, raising some basic questions on the IPO pricing, on the listing, after a listing growth and thing like that. So it's a good thing that happened in this course of these, India bull run and India story.
And what is interesting point is you talked about various other companies, Paras, Happiest Mind, a couple of other companies which can be mentioned on macro tech developers. When the listing happened, it was not lots of money on the table. It was a weak listing, but post the listing also, through proper articulation of the business and financial model and proper articulation by the management of the company, the valuation has increased significantly, and there are over 100% returns in spite of a weak listing. So ultimately, the companies, founders and IR, CFOs need to articulate very well on the business and financial plans and the strengths of the company and overcome the challenges. So a weak listing, it can be made up also appropriately in consultation with some of the key major shareholders and retail investors community. 10 lakhs is a huge investment population in one single company. 10 lakhs disappointed investors, they need to be informed immediately without delay on what has actually happened. Otherwise, this gives a rise to more rampant speculation and miscommunication by vested interest, maybe at the instance of rival companies and platforms, or at the instigation of investment bankers who did not get the mandates, as some people say. Quite interesting. Another company also, Latent View, is one of the companies which we have discussed a deep dive. They got an excellent response in terms of subscription, and listing is going to happen, and people are expecting a good listing on the table. So hopefully the sentiment will revive. Monday should be a better day, and we get a better valuations and market in spite of consolidation which is happening. irrational exuberance gets mitigated and a proper discovery takes place, that is quite a need. It's an art and a science, and a deep dive by savage participants here through a 360-degree deep dive. Wonderful insights, methods of valuations, practical issues, deep dive. Excellent. One of the finest presentations and discussions we have had on valuations. Real life practical example, financial modeling, Excel, how numbers can change and how different factors come into play.
Last concluding slide from my side. If I have to conclude, the method of valuation is a very crucial factor, as we have understand and discussed so far, because of taking a 360-degree approach to look into the business holistically, and discounted cash flow method allows to enter deep into the business and have look at the realistic business assumptions coupled with vision and passion of the entrepreneur to successfully implement the same. That is why we say valuation is required to be have a deep dive. Another method supplements and shows the way where market, industry or competitors are leading towards. That's why I say an example, we sometimes do the average of the multiple methods also to arrive at a final value. And preparation of right financial model based on the entrepreneur vision and business plan will lead to a real valuation as per DCF, is my conclusion. And deep diving into business and financial modeling skills can open up another avenue for the professionals to render such services. As I mentioned, if as a registered valuer, I will look into the business model and plan submitted to me by an entrepreneur, there can be other professionals who can open up avenues like rendering services of consultancy services of making a financial model on behalf of the business entrepreneur can be a new avenues open for the professionals. So that's it from my side for today's sessions. I'm still open for any more questions on the subject. Thank you. Thank you so much for giving this opportunity.
Ravi, you know what's the best thing about your presentation? In single words, you mentioned a website, and in a website, it shows a strong importance of cash flows. It starts with the word CAS, right?
Yeah.
Yes, this is a further deep dive. This shows cash flows are very important for any valuer, for any professional, and for any business to take the India growth story forward at number one fastest growing economy in the world in FY22, and we are leaving China much behind. Of course, in GDP they claim to have a higher number, but there is opaque numbers of GDP, and Indian GDP numbers are articulated in a much more transparent manner with proper debate and discussion. So it's interesting. Keep on giving importance to the cash flow and keep on sharing the links of YouTube also on your website, which shows the importance of cash flow. So everybody, every person gets a benefit of the deep dive you have done on valuations as a part of series you are doing on a regular basis on the multidisciplinary platform. Really, Umesh,
cash is the king.
CASH, more importance of cash flow.
True.
Yes.
Good meaning assigned to it, sir. Thank you.
This also shows the wonder a woman with wisdom, women empowerment, how they are leading the professional firms, of which Ravi is a very integral part of it, and saying doing value-added services, right? CASH, right? WETA, cash flows, right? And contributing to the growth story, Wonder Woman with Wisdom, right? Umesh, you have been working together and associating with a lot of Wonder Women and encouraging them on this platform regularly, so they get the benefit of very high level of excellent interactive participation, which is missing in most of the professional bodies interaction. In fact, people say even at the highest council level, are they scared of interaction? What is so afraid of interaction? Are people not able to answer when you are some of the finest professionals, right? Like Ravi, Umesh, Dushyant, Krishnan, every issue, every answer, every vital issue can be answered appropriately in the most professional way to take the India growth story forward, including the most difficult ones like Zomato and Paytm, right? every issue has been discussed in detail. Thanks to Wonder Woman with Wisdom, you have been encouraging. That is a highlight, and men fully supporting it with deep dive knowledge as partners in progress, right, Ravi?
Yeah. Very true.
Partners in progress.
Very true.
So now we have a couple of things. I think Krishnan has shared deep insights on the financial instruments pension. And then we have something very important, transferable vote. Everybody is wondering transferable vote. I think somebody, Ravi has got some deep insights from the website. Later, I think we can cover with lot of inputs from Umesh. Can we have Krishnan cover very briefly the various financial instruments?
Yeah,
Krishnan, you are there?
That, Manoj, before that, we have rather the presence of one of the leading women, Archana Yadav also, because she had some other meetings, so she could not join from the beginning.
Fantastic. I think she came at the right time. Wonder Woman with Wisdom, right?
Yeah. Please. I will request
Wonder Woman with Wisdom.
Yes.
So fantastic. Can we have Archana put on a video and share insights on Wonder Woman with Wisdom, how it can take forward India a growth story to the best in the world, highest level of ethics, highest level of excellence, highest level of enterprise, and how women can contribute taking the professional opportunities and leadership to best heights.
Yes.
Are you there
Archana,
with us?
Yeah. I can see
video on.
Yes, I will request her to do that.
And Umesh, please share a few thoughts about her industry experience also. We need more women in industry and more women to articulate their thoughts very, very clearly. And she has promised to bring a lot of speakers on the Wonder Woman with Wisdom series who can articulate very, very well and on interactive platform and educate justice and time given to them, as we have done wonderful today. Archana, Krishnan.
I can share thoughts after maybe Archana ma'am presents.
Yeah, Umesh has called one savvy lady.
આવશે મમ્મી હવે આવતા વાર લાગે ને.
Archana, can you put on video? Yeah, please.
Yes, sir, I'm there.
Welcome. It's a delight to have you. Wonderful.
Thank you so much, sir.
It's nice to see smiling faces and enthusiasm for the India growth story.
Thank you, sir. Thank you so much.
Rather, we are in the age of women's empowerment, but rather women are already empowered, and rather men are getting empowered through women nowadays. Yes.
Yes, sir.
Yes, please. See, rather, hear from the dynamics of women and how the things are going.
Sir, your voice is on mute.
No, actually, can you hear me now?
Yes, sir.
Yeah. Archana, rather this platform, today we have discussed a lot about the valuation, Paytm, Zomato. You had so much. Now also you are dealing in a lot of things, handling so many assignments on various corporates, top level corporates, dealing with corporates in a professional way also. So some of your insights also, and now you, directly or indirectly, you are going to lead the profession also. In coming days, you are contesting the election also. So we would like to have something from your side about this, your industry parts and the women empowerment on the entire 21st century era. Throw your lights on this. Yeah, please.
Yeah, thank you so much, sir, for the invite. And I'm really blessed to have, seniors who are so, welcoming and so enthusiastic about learning the things. And, we are the society who are so welcoming to the new changes, new laws, and, ready to learn, unlearn the things and learn the things and, incorporating the changes and implementing them at the ground level and helping the society. So this is really, one of the most beautiful things that happens to our society. And I'm so humbled and, with a lot of gratitude for my CA society as to when we started our career, I have been, welcomed with both the hands. And I was so blessed that, I got the opportunity to work in corporates as a manager in taxation, as a, heading the tax systems. And as far as the valuations and other things are concerned in current system, if you look right now, the stock market is too high. And if you look at the other part of it, today only I read it that Bitcoin is trading at $58,000. So, these valuations of the shares or the corporate valuations definitely gives you huge challenge in terms of thinking process as to how the valuations at what level is getting done. But believe me, as of now, we as a society have been growing at a very, very rampant stage. And if you look at the exports, today we are 100 billion exports right now. We will be the fifth richest economy in coming years. So what I'm looking forward is that we as a chartered accountants, can play a very pivotal role in bringing the clarity to the stakeholders and to the consumers as to how the shares valuation are actually done and how then they impact the stock markets and how they pull it up and pull it down to a certain extent. And believe me, recently when the Paytm got listed, people were a bit, on a dejection side because it listed at a discount. Though valuation was of somewhat 2,100 rupees, but it is, projected to go down to 1,200 rupees now. So that is one part wherein people are still under dilemma as to how an IPO valuation is done at that level, wherein, it is at such a price and then listing at a lowest level. So somewhere we chartered accountants can, bring in some study or maybe some information that can be circulated as to how the valuation, making it more transparent, making it more understood by the customers, the stakeholders, the consumers, in fact, the people who actually are the retail investors in the stock market and in the NSE and the BSE. So that can, play a very pivotal role in bringing the clarity. So I, as a retail investor, will not be, taken for surprises day in, day out. Because when Nykaa lists as such a brilliant price and people, are in awe with the pricing. And then Falguni Iyer becomes one of the richest billionaire in India, richest female in India. But then Paytm goes down to that listing. And coming to the second level, as I'm representing the entire CA society now and females also, and talking about the Falguni Iyer ma'am, believe me, we are, a society wherein if a person takes an initiative and females are the one who feel like they are so clear, focused in their agenda, and they have, somewhere proved themselves and they have led the baton somewhere. So some of us females, we need to come ahead, prove the potential to the entire world. And if you look at the recent examples, if you look at Angela Merkel, if you look at Falguni Iyer, if you look at the recent banking chairman Arundhati Banerjee of SBI, if I'm quoting it somewhere out of context, but possibly let's understand we female chartered accountants are still, somewhere lacking, limiting ourselves, our potential to certain extent, instead of, coming out and telling the world that, see, we deserve the positions that we have. So this is one, thing that we need to come out and tell the world. And coming to the another part of it, I'm also into certain board of some of the companies, and I feel this valuation do play a very pivotal role, because every time that you have a board meeting, the market price gets discussed as to what is the market price when it started and what is the market price when the board meeting is ending. And many people actually are more inclined to the share market price. So that's one perspective. I'm also a potential candidate of the Central Council right now, and the agenda that I'm driving right now for the council, Central Council, is the transparency and the accountability. So as if you see, we chartered accountants are the most accountable society in the entire India. So any place that I sign or any paper that I sign, my membership number is written over there. Any person can go check my membership number check my detail, and can always ask me and come back to me asking what was the basis of signing those documents, or why whether I have signed it with the proper understanding or not. So we are the most accountable society. If you look at any other body, I do not find them so accountable. If you look at any professional body, doctors, advocates, or any other body, I'm not getting into specifics. But if you look at the body, we have membership numbers. Our details are available with ICAI. Look at section 271J of Income Tax Act. If you look at the NAPDA, 271J is a section wherein anyone can come and they can write to the department can write to the ICAI and tell that the particular chartered accountant has erred in issuing the certificate. So this is the level of accountability that we carry in the society. Then we come to the level of transparency also. We are one of the most transparent society. The details are available on the website. Possibly we need to be more transparent in sharing the information as to what is, what are the next 10 years agenda that we carry. And maybe we can bring a change. We have been part of the change. And if I just reiterate the statement that Honorable President APJ Abdul Kalam ji made, that we chartered accountants are the partner in the nation building. Possibly we can, bring the change to happen. And we are, all of us are, very pivotal part of this society. So not only within the CA society, we also drive, the betterment of the society at a local and at the national level. So thank you so much for the opportunity. All the best to everyone. Thank you so much for the space provided. And thank you, Unmesh sir. This was really a great initiative by the team. Appreciate it. This is the level of clarity that we seek from the future generation. Thank you so much, sir.
Very interesting. You have talked about the global story. You talk about women on the global platform. You talk about the finest woman who rose to the highest level in Europe. You also talk about the eminent banker who is not only retired from State Bank now, but associated with the topmost globally renowned IT company at operational and topmost advisory level. So quite interesting. And TA, you mentioned about TA. Some people thought about transactional analysis. You are introducing a speaker who will be prepared and discuss in the future of Wonder Woman and Wisdom series. TA is also technical analysis, which is very important for markets. Now more and more charts will be made of Paytm and Zomatos and Nykaas. And Nykaa, you mentioned about Krishnan Iyer. She communicated and interacted with me extensively when she was with Kotak and also on the board of Tata Motors. She told me, I'm happy with Kotak, but the biggest thing is she is not looking at valuations. She is looking at satisfying the customer. Very, very clearly, all women and all customers should get the option of the right product, right color, right taste. And they are ready to pay the price. Margins will come from themselves. And earnings are not that vital because earnings can be manipulated. Ethics is vital. This is what Falguni has demonstrated. She is conveying to the market also respectfully, and day-to-day listing gains take place. And you mentioned about TA going beyond transactional analysis and technical analysis. TA, trust and transparency and accountability. For trust, you need transparency and accountability. This needs to be implemented by the Paytm founders and CFO also. Once they are able to communicate transparency and accountability, they will get the right evaluation. Not only just a 25-27% loss, they can multiply 10 times also and be one of the finest platforms with maximum products and excellent delivery on the way. And transparency and accountability, whether it needs to be done through RTI and through RTI appeals on a sustained basis, or it can come voluntarily through transparency and voluntarily disclosure and proactive communication by the influencers of the professional body, which you are currently are and would also remain hopefully permanently in the future. Influencer plays a much better role than the office bearers and the council members who have a limited term, but for the council members also, they imbibe the values of advocacy you have done for transparency and accountability. That is vital for success of any country, any professional body, any professional or corporate entity. It's really wonderful to talk about transparency and accountability. That TA should be the buzzword every day in any communication with all stakeholders throughout the globe. Wonderful, wonderful work. Wonderful
Thank you so much,
communication
sir,
by
for
you
the
today.
lovely words. Thank you so much, sir. I'm so humbled and blessed.
It is very important to have diversity in all meetings, whether they are board meetings or whether they are council meetings or they are a subcommittee or wherever you are involved. It is very important, and don't fail to articulate TA first. Whether then let them say what is TA, let them ask, but that transparency and accountability must come. Actually, your name, I think, should be adjuncted with TA, like Ravi is saying CASH, cash flows are important, right? And the woman behind.
Agree, sir.
Yeah, rather great
There?
thanks to Archana for giving your precious time out of your busy schedule of campaigning. I know you are running door to door or office to office to meet the chartered accountant. These are the other few ending days of meeting the voters. I wish great success to you in your central council election. Do your best. I know that your tagline is trust and accountability. Rather, we see that the transparency and accountability will work in your favor in coming days.
Thank you so much, sir. I'm so blessed. Thank you so much. Thank you.
Yes.
It's much beyond elections. It's much more in life. That's what
much more in life.
accountability is important in life. In every interaction, every communication we have. And in this multidisciplinary platform at a global level, we focus on every profession, every professional body, and the best professional bodies. There are many ICAW, CFAs, MBAs regularly on the platform. We know BTech, CFAs. Ravi, are you there?
Yeah, rather Ravi is also as a partner of Shweta Jain and company. She is also one of the really Wonder Woman who can say having empowered women, and she is also fighting for the regional council election. So actually her presence was supposed to be there, but she may be traveling somewhere, so may not be able to join for today. But yes, Ravi is a part of the team of the office, and he has given an excellent presentation today. Rather, everything what he has discussed, what we have talked, is really gaining a different knowledge from altogether from the valuation per se to what is possible, what is not possible, how it happens, what is not happen. Yes, some of the comments I also seen in the chat box also. Yes, definitely SEBI will play its role in coming there, learning from experiences, how things are happening. Yes, they will come definitely with some advisory on the IPO valuations, so that the investor should not be at a stake or they should not be taken for ride. But yes, rather I remember the economics I learned in the 10th, 12th somewhere, that yes, in a long term, the market demand supply forces plays its role, and they bring the pricing to equilibrium pricing. Rather, that is the best price that investor can get. And I think we have to wait for that equilibrium pricing, or rather the price which market process brings out in a reality. So it is really in a pretty early stage. It is just a listing. Let market forces play its role of demand and supply, and correct valuation, whatever the valuation that entity should really get for its own shares will happen over a period of time. So let's wait for that time to bring that correct valuation in the market forces, and then probably we can think whether how we are matured enough to take the call, rather investing in the share market. Whether these real retail investors, who are the real investors, are they really matured enough to understand the market forces, to the valuations, to the IPO, or whatever so-called rather foreign imported words are there, though we are also understanding it for over a period of time. But are they really well aware about these concepts, or they are really on paper? We have to wait for the time. Thank you. That's great. Thank you, Ravi, for your interactions.
Our
Very
regulators are doing a wonderful job. All our regulators are doing a great job in taking India growth story ahead. The RBI, SEBI, NFRA, even the professional bodies, regulators for exam purpose or other purposes, they are doing a great job in taking the India story forward. Maybe a lot more needs to be done, as most of the influencers here are aspiring and also working towards it. So we'll have a lot more to think. Krishnan, are you ready? And then we'll understand
Yes, sir.
various opportunities available, various products available for in the market, particularly on the pension side, useful for retirement planning and building up savings. Then we'll have this demystification of the transferable vote, a unique complex system, but very useful, practical and relevant. Yeah, Krishnan?
Yes. No, thanks a lot, sir. Thanks a lot for giving me opportunity to interact with a very learned forum. Okay, only thing small hitch, as I discussed yesterday, I couldn't make a small presentation because I had to awareness program, but I put through my thoughts in a paper which I will be sharing. And with World Investor Week approaching from the Monday, I got a bit occupied with few assignments.
Okay. Let's focus on the subject.
Yeah, sure.
We'll have the key insights on that subject.
I would focus on few points. See, I would interact a lot on chat. See,
we'll have about 10 minutes. Then we have transferable vote, and then we have an open house on any subject.
Yeah, we spoke about, see, life is very simple. Okay, there are two risks: risk of dying early and living too long. And I will be speaking on the living too long. Today, with medical technology advancing, the probability of living long is far higher. And so post-retirement, your expenses are broken up into three parts. Just to simplify it, I call it LLH. LLH is living, lifestyle, health. I repeat, living, lifestyle, health. Living is very simple. Ghar ka ration ka kharcha, aloo, pyaz, tomato, basic needs of life. Health, as everybody knows, is health expenses. Again, health expenses can be of two types. First is routine expenses. I am putting it in the chat box.
That's interesting. Krishnan, can we have what are the 4 different types of asset classes the pension funds, the NPS funds are investing in? Let's have a quick rapid fire round. We'll focus on other issues later. Let's focus a deep dive on the core issues, one by one.
Yeah, I will just touching upon that. So now to focus on routine and capital expenditure. Now, typical when it comes to pensions, there are simple bank FD is there. Then you have post office monthly income scheme. Then you have LIC Vay Bandhan Yojana, which is also a good product guaranteeing returns. Annuities are a huge opportunities. Okay, so annuities essentially are of two types. First is a single premium. First is an immediate annuity. Saying immediate annuity means today you put lump sum and the money you start getting the pension or annuity from the next year or from the next month. Okay, there are different types. And simple logic is higher the age, higher will be the annuity payout. Now, the challenge in today's scenario is the annuity rates sometimes may not be that competitive, but the advantage of annuity, especially for the living expenses, is they rule out the interest rate risk. Because once you enter into an annuity contract that is guaranteed for next 15, 20, 25, 30, 45 years, how much ever you will live. So simple, it's reinvestment risk is taken care of. And second product is the deferred annuity. And in deferred annuity, a key product is NPS. NPS, as we all know, is National Pension Scheme. So in Section 80 CCD of the Income Tax Act, you get a benefit of 50,000 rupees. This is over and above all deductions. And apart from this, few corporates have, with world moving from defined benefit to defined contribution, the scope for NPS is far higher. Especially in a country where, like India, where we have a lot of demographic advantage. So today we have a demographic advantage. It could turn out into a disadvantage maybe few decades down the line. So a product like NPS is an excellent wealth creation product, and also it can be converted. So essentially NPS has 4 products, 4 fund options. Okay, first is equity, listed equity, the range for listed equity is that's top 200 only. NPS as a product can invest only in top 200 stocks, and also there is a filtration criteria that has to be in FNO. That has to be in FNO. So recently, PFRDA came up with the guidelines for NPS investing in IPOs also, but it was highly debated. It was highly debated at various forums. Okay, so for first is equity, then second is corporate bond fund, and next is GSEC, government securities, and third is alternate combination approach with AIF. Okay, with an option to invest in AI alternate asset classes also in range of maximum of 5%. Okay, now even within, if you see the NPS AUM, chunk of the NPF AUM is contributed by public sector undertaking, PSU undertaking. For example, I just took, just to put some numbers, okay, I just did a random number of SBI. SBI today manages around 2.6 lakhs crores. And, okay, and all PSU Provident Fund goes to 3 NPS providers: SBI, UTI, and LIC. So SBI today manages around 2.46 lakhs crores. So apart, just to put it, put a different perspective, I thought I took one of the latest entrants in the NPS sector, which is a private sector where I worked for 14 years, which is the Aditya Birla pension, Aditya Birla Sunlife pension. And surprisingly, Aditya Birla pension manages only around 496 crores. So that is the difference between a PSU AUM and one of the latest. So the in between, the opportunity is there because of demographic advantage, which we scope, and world moving from defined benefit to defined contribution. So I put my thoughts in challenges. So I will just share. Is my screen visible? I guess yes. Can somebody vouch it? And in fact, when I have done a lot of, sir, is mera screen dikh raha hai, sir?
Yes, we can see.
And when I do this, done a lot of investor engagement programs, okay, even in PSUs, the biggest challenge is many of them get irritated because why the government moved from defined benefit to defined contribution. It is quite challenging. Many of them are just doing this because they don't have a choice. Since 2004 onwards, with the advent of NPS, government employees ka provident fund is by default market link. By default, there are pros and cons to it. So just to put things in perspective, NPS mein sirf 4 ही option hai. Mix Hindi, English, I will be speaking. In an NPS fund, you have only 4 options, which we discussed. It is equity. Of course, you can switch. There is auto rebalancing, which progresses depending upon your age. But I personally feel the choice is restricted. Today, even if you take a ULIP, a certain life insurance companies, ULIP have 16 fund choices. So that is phenomenal. Or even if you take a mutual fund scheme, the number of mutual fund scheme is phenomenal. So the choice is too high when it comes to even ULIP, mutual fund. So NPS has only 4 choice. So, okay. And this we have discussed. NPS as a universe can invest only in top 200 stocks, while mutual fund, etc., can invest in other stocks. Okay. Point number 3 is the biggest thing. Okay. In today's present taxation is not that favorable when it comes to NPS. Of course, during the accumulation phase, apart from ATCCD, you get a deduction of contribution towards basic, which gets deducted. This is basic plus DA, basic plus 10% of basic plus DA can be accumulated over and above all, and it's a deduction. It's like old superannuation scheme which used to work. Some portion of it gets divided. Now today the challenge is, okay, the annuity pension jo milega, it is taxable. I repeat, annuity pension jo milega, it is taxable as income from other sources, because after retirement, the employer-employee relationship is not there. So that's the biggest hurdle. Okay, to there, a mutual fund where I create my wealth to mutual fund. Okay, and do an SWP that is more tax efficient. And also, why it is more tax efficient, I can increase the amount in an SWP also, depending upon my LLH needs, which presently is challenging in an NPS scheme of thing. Okay, and another challenge is today many people invest in NPS. It is like purane zamane mein bhi today also many people view a life insurance as a tax saving tool and not as a risk management product. Okay, so NPS, I personally feel to some extent it is getting into that trap, because many people put 50,000 only to save tax, not for, it's not a goal based product. For example, I know many people with 25 lakh rupees income, 25 lakh unka income hai, so their monthly spend is going to be greater than 1.5 lakh rupees. Okay, income 1.5 lakh hai, spending uske aspas hai. So obviously, when we are investing 50,000 rupees per annum, so again, it goes back to your old mentality of buying life insurance for a tax saving tool and not as a risk management. Okay, the biggest challenge is connecting the public sector undertaking, which I spoke. Okay, today is we need really, it's a thinking. Okay, point number 4 is 5/5 is the most. For example, at the end of the day, my entire product, my jindagi bhar ka kamai in a layman's language is subject to market swings. I repeat, jindagi bhar ka I am accumulating for 20-25 years, and one swing, one market day going for toss, or last 1 month closer to my retirement, okay, the market enters into a bloodbath, my entire savings can get wiped out. So that can cost NPS person who is investing his Zindagi Bhar ka kamai, his savings can go for a toss overnight. In 2 months span, it can get wiped out. So what do we work out with it? For example, when I was with Birla Sunlife, today there are certain ULIPs and pensions which guarantee you minimum corpus. For example, of course, the returns could be low, but it shields you from volatility. And can NPS, this is just a thought which I put when Manoj sir asked me to share my thought. For example, can NPS have a CPPI based model product? For example, CPPI based model is constant proportion of portfolio insurance. I repeat, constant proportion of portfolio insurance, and to some extent, again, it's a very detailed topic, CPPI. For example, today, BAF, the balanced advantage as a category, to some extent is similar to CPPI, you can say. Okay, and more importantly, today, the cost structure, combining point number 7 and 8, the cost structure, of course, NPS is an extremely low cost product, but is cost itself becoming an hurdle? Okay, because एक डिस्ट्रीब्यूटर जो एनपीएस प्रोडक्ट बेचता है उसको सिर्फ स्टार्टिंग में 25 पैसा अपफ्रंट मिल जाता है, दैट्स अबाउट इट, उसके बाद आगे कुछ नहीं मिलता है. सो व्हाई ही वुड सेल इट? Okay, today he might as well sell a mutual fund which gives him so much amount of trail. Okay, it could be 60 paisa, 80 paisa depending upon the fund, but that's not there. And other thing, connecting the cost is today, if you see, AMFI is promoting with the investor education fund, which is 1 paisa, her mutual fund ko has to contribute towards AMFI investor education. Ye AMFI budget mein jata hai. That's how the industry works. Okay, so can NPS, with it's already a low cost product, now the advertisement of NPS is absolutely not there as a product. Now if you see mutual fund sahi hai, it is completely brainwashed everybody. You will agree with it. Now मेरे बिल्डिंग में सिक्योरिटी गार्ड भी पूछते हैं, सर वो म्यूचुअल फंड में डालेगा पैसा डबल हो जाएगा क्या, कितना रिटर्न मिलेगा? That is the brainwashing media. It is like what Byju's is doing in education. Similarly, if you see, they have taken up good amount today. A step ahead is the AMFI as a regulatory body. It has started educating on ETFs as a lower cost proposition because passive investment is catching up worldwide. Second, it is also promoting on direct plan and regular plan, the difference. So the awareness, and because of these, the AUMs of direct plans are seeing a surge, because, and again, with markets being crazy, the education, especially in certain savvy segments, are increasing. So they are migrating to direct, and that trend is quite visible. And also fintech platforms, like many fintech platforms, including Paytms or Upstocks, etc., predominantly they provide. It started with 80 Economic Times platform. Essentially, they started promoting direct plans as a lower cost thing. So today that is really educating. But the challenge of NPS is, I personally feel the concept is good, but again, let us take a bank. Okay, I know of a MD of a bank who got, again, banks are mandated to sell NPS also, but why I surprised, being from a bank assurance space, having worked there, why a distributor majority would like to sell a product which gives him less than 25 paise, around 25 paise, even if he does. Okay, or why not sell a life insurance or some other product? Because even a typical bank RM, he has a target to drive every month. Okay, and some products pay him around 30% upfront commission. So these are, and I know of a PFRDA director calling a CEO of a bank to just to ensure that why aren't you not selling? He just pushed it. So you understand what happens. And again, apart from this, the government is also trying to protect the Atal Pension Yojana. It is at the lower segment of the society. The maximum amount of pension which you can get in Atal Pension Yojana is 5,000 rupees per month. Again, it is, you can say it is a defined benefit scheme targeting at the extremely lower segment. Okay, so these are some of the thoughts. So my biggest takeaway, choice should be choice. It is, if you ask me to summarize, it is NPS should, I personally feel, should come with more choice of fund should be there, and capital guarantee can be thought about, and more importantly, education is needed. Education is needed about a concept, especially with markets creating a lot of wealth. And today, even apart from wealth, the awareness of financial products, equity is increasing. So these are my thoughts which I could put down. Okay, again, thanks to Manoj sir for giving me a small opportunity to present my thoughts. Any questions, etc., we can definitely discuss. Thanks, Manoj sir, for once again.
Hello, Krishnan sir. Milan Shah here. Can I ask you a couple of queries?
Yeah, sure. Try my best to answer.
Yeah. See, AIF, you said, is one of the investment options in NPS. Actually, yeah. I see only the three things, that is equity, GSEC, and corporate bonds.
Yeah, there is an option D also. In AIF, maximum 5% can be allocated.
But
let me come back to you. You are saying when you log into the portal, you as an NPS subscriber, you are not able to, right?
Yes.
Okay, let me come back to you via Manoj sir, definitely.
I think it is based on the life cycle only.
Yeah, life cycle
choice.
A, B, C, D may customer has an option to switch between A, B, C, D. Okay, but just in case, everybody is not market savvy, and sometimes wrong switching can create, you can destroy wealth also. Okay, so to make it simpler, what government has done, it's an auto rebalancing, wherein closer to higher the age, the equity allocation is higher, and that as you are approaching your retirement, your allocation toward debt automatically increases. So your portfolio is automatically rebalanced depending upon, as you have simple logic, as you approach closer to your retirement, the equity exposure reduces and the allocation toward debt increases. Let me come back to you on the login for the AIF.
Yeah, I have not taken that auto lifestyle, life cycle based choice. I have taken, individual, my own choice. Like in that, I am able to make only 50% in equity and 25% in bonds and GSECs. This AIF, I am not able to see. Neither I am able to increase my equity to more than 50%.
Okay, let me come back to you. What's your age, sir? What's your age?
I'm 57.
Maybe I guess it could be because because of your age, they have
restricted
restricted it, because it could be higher. I could only see that as an option to your second query, but first query on AIF also connecting your age, because maybe at your age it doesn't allow. This is my thought, but not an answer. I will come back to you with an exact answer.
Yeah. And other challenge what I was facing is, if I want to change do any switching between the fund manager or
two switches in a year are allowed. Two switches in a year are allowed.
But that we are able to do only during the working hours of PFRDA. That is very silly, na? If you are doing something online, why that should be a restriction?
Yeah. That's a strain.
The concept of online is lost.
Correct. Rightly said. In fact, even in a ULIP, this is again very right point you raised. For example, even in a ULIP, you can at any point of time. Today markets are not working, but still I can do a switch. Of course, it will be executed on next working day, but this flexibility should be there. In fact, just to add one more point, okay, the NPS Trust website, I shared this with Manoj sir also. The NPS Trust website, when you log in, it's not secure. It says the site is not secure. They manage
would have not
crazy
taken out that certificate.
certification. So I feel so it's like a classic case. I would be penny wise found foolish, but that matters. That definitely matters when you are.
It does not give the requisite confidence to the users.
Yes. Especially when you are managing retirement and crazy amount of AUM they manage. So it's a small matter that they should make the site secure.
Yeah. Even this, it should be able to, one should be able to do the transactions at any given point of time in a day or on a holiday. Why it should be restricted if we are doing online?
Yeah, I gave my thought on the same. I will come back to you with the answer.
Okay. And as far as the performance is concerned, what you feel? I mean, as compared to vis-a-vis mutual funds, you feel that mutual funds actively manage mutual fund, they will always outbid, this pension funds. But what about passive funds? Has anyone done any?
Globally, again, pensions, see, at the end of the day, business ka simple rule hai, cost is reality, price is politics. I repeat once again, cost is reality, price is politics. So over a longer span of time, NPS being lower cost can definitely will add more wealth to your portfolio over a longer span of time. And especially with the world moving to passive, and even of late, there have been a lot of articles on fund managers not being able to beat the index. Also, forget there were some people are also discussing at various forums that the expense ratio of a mutual fund compared to a passive is relatively higher. The alpha generation is far lesser than the incremental expense ratio. So these are some of the thoughts which are discussion at various forums.
Yeah. Probably it's a different topic altogether where we compare the returns from pension funds and passive funds.
Yeah. See, maybe that is the reason the PFRDA being very proactive, they are restricting their universe to top universe, because the volatility and beyond 200, it may not have the depth and volumes for just in case they get caught at the wrong foot. Today, again, just to connect the point, for example, some mutual funds also, especially in the small and mid cap category, the allocation to one or two stocks is relatively higher compared to, it could be 6, 7, 8% of their portfolio. So that is what some mutual funds are doing. Is I don't want to name any funds. Okay, to what they are doing is indirectly the incremental AUM which they are getting is relatively higher. So what they are doing is they cannot take one stock, but they cannot increase the exposure to one stock because it can be a liquidity risk and they could be in a catch-22 situation. So what they are doing at this phase is they are diversifying into simply they are diversified their portfolio. Especially,
I still feel that it can be expanded to Nifty 500.
Yes, that's it's being discussed at various forums. In fact, recently when PFRDA, this was very recent, around 2-3 months back, when PFRDA came up with a notification that NPS can invest in IPOs also. So this was debated.
And they should probably consider, along with GSECs, they should also consider like 5 to 10% towards, gold and silver, I feel.
Yeah, they are. Even IRDA, from what I understand, being in the industry, it is the discussion paper. There are a lot of papers at discussion at various stages.
Okay, good if it comes, because it will give the some sort of a diversification.
Yes.
The funds. And I know, I think we already discussed, but do you have any views on whether passive funds are beating the pension funds or pension funds are beating the?
No, the performance, to my knowledge, whatever I did, the performance is very much on par, and performance even within NPS, it's not the switching actually doesn't make sense.
Yeah.
The switching doesn't make sense.
So passive funds and these are almost par.
Yeah,
At
very much on par. And NPS is a very, see, that's what I put 0.7 and 8. It's a very low cost product. So अभी product का खर्चा ही इतना कम कर दिया तो distributor को बेचने में कोई पैसा ही नहीं मिल रहा है, उसमें point number 1 है. उसको सिर्फ कस्टमर एक्विजिशन स्ट्रेटेजी, ही कैन एक्वायर कस्टमर, बट अगर वो डिस्ट्रीब्यूटर ने कोई कस्टमर को उसके ऊपर कोई क्रॉस सेल अपॉर्चुनिटी नहीं निकला तो सर्विसिंग में ही जाने वाला है. ओके, एंड बिकॉज ऑफ लोअर कॉस्ट, इज इट दैट दे आर नॉट एबल टू प्रमोट द प्रोडक्ट? फॉर एग्जाम्पल एम्फी में आप कंटिन्यूस देखते रहेंगे, दे आर टेकिंग क्रिकेटर्स, म्यूचुअल फंड सही है, दे हैव तेंदुलकर ऑन बोर्ड, धोनी है, देन Rohit Sharma, Shreyas Iyer, they are roped in great brand ambassadors. Okay, and they are promoting mutual fund SIPs in a big way. But I don't see PFRDA doing it. My personal thought is cost a constraint in promoting.
No, but they should have access to this investor education funds. No? See, it should not be only left to the mutual fund industry.
Yeah, because I do a lot of education program, I would say MFs would be selfish out there.
But like, I don't know who is the custodian of such funds, whether stock exchanges are the custodians or
the NPS trust. That's why you have an NPS trust. Na?
No, not. I'm not talking of the NPS trust. I'm talking of this investor education funds, which are being used to have this mutual fund campaign. Promotion of the mutual fund.
No, how it works is every mutual fund has to spend 1 paisa on education program. That's what I've been doing for last 4 years. And other, they also have to contribute to the AMFI AUM. So in case they don't spend on programs, for example, some mutual funds say there are a lot of compliance issues, especially they are not that active in the online space. They say we will pay this money to we will pay this money to the AMFI fund. As simple as that. They are very clear. So it's 1 paisa of the AUM.
Okay, that is one fund. I was just thinking that, unclaimed dividends and interest and all those things, FDs and all those also get transferred to.
Yeah, that also. And just to unclaimed claims, the AUM of unclaimed claims with various financial authorities was 5 lakh crores before COVID. So, the main reason for that was nomination and KYC pending, and this is pre-COVID data I'm sharing. So I'm sure. So the reason is, financial literacy is very, very low in our country. Even today, many people, it's quite common. I have done these, again, don't take me, I have done these education programs for ICAI also as a part of CA capability building. I have done 2-3 programs. So there also I find many CAs, they are blindly, this is just, since we are in the topic, they don't take term as an investment. They don't buy term. And also many are, even now they are dependent upon CA Institute only for health insurance of family also. Which when I studied basic, I found it as an element of copay, at least in the initial years.
Correct.
So the opportunity for financial education is really huge. Of course, the other side is also true.
That's where this unclaimed portion can be used, by NPS also.
Yes. But as I said, see, for example, just to, since I done, me and Kunal Joshi would have done a lot of IAPs last 4 years. I am active in the IAP space for last 4 years.
Now, very good insights by Milan Shah and Krishnan. A couple of issues before we move to the next topic is now you have excellent experience as a veteran with Aditya Birla Sunlife Pension Management, and you mentioned about the size of the AUM also, and also much larger players, and it's a large growing industry. What are the challenges you feel on the management of Aditya Birla Sunlife Pension Management, and what improvements they can do on the management bandwidth and growth and quality of service to all stakeholders and meeting stakeholders' expectations of the own company and also the parent holding company? Then I'll come to another important question.
Yeah,
then we
sure,
move
sure.
on to another
Hey,
issue.
Just to clarify,
Let's focus on Aditya Birla
I'm
Sunlife
coming
Pension Management. Yeah, and you have got
So I
rich
do-
experience as a
Yeah.
veteran. Yeah.
Yeah, thanks for that. That's thanks for now. I worked with Birla Sun Life Insurance and NPS. Birla Sun Life, the NPS subsidiary was just forming. So I took two different examples just to put things in perspective, because Birla Sun Life Pension is Aditya Birla Pension is one of the latest entrants amongst the 7. So obviously, I personally think their AUM, they will always be a niche player. They will always be a relatively niche player, because today what is happening is the PSUs, the PSU pensions amount, especially for new joinees after 2004,
No,
which are
this
coming up.
question is specific to Aditya Birla, Sunlife Pension
I'm coming
Management.
to- I'm coming
What
to.
they can
I would say-
can do, the management bandwidth to meet the stakeholder expectations and for better meeting the expectation in terms of growth, in terms of service delivery, in terms of products, in terms of technology platform, etc.
Their technology platform, from what I understand, is quite robust, especially being from the tech oriented. They are the new generation, but their AUM, I feel, could be relatively less compared to, because today what is happening is the top three NPS, which is LIC, SBI, and UTI, they will continue to outgrow public sectors for a simple reason. And other small handicap which Aditya Birla NPS, but this is again my personal reason, okay, don't fear, because they don't have a bank bandwidth, they don't have a banker bandwidth, which others have. With other, for example, ICAI, HDFC, Kotak, they have a bank to piggy bank wherein they can cross sell NPS, which presently, but still, being from the Birla Sun Life, at any point of time, even Birla Sun Life they were the biggest players in the bank insurance space, despite promoter not being a bank. In fact, sometimes it can come to an advantage also, because our pitch was very simple. Since we don't have a bank, we will not poach customers.
Okay, second point is very vital, a very quick answer, very quick
Sure.
one.
Sure.
The parent company, a flagship company for Aditya Birla, management of various products, the holding is Aditya Birla Sunlife AMC, which got listed recently.
Yeah.
And that is also the performance of the listed entity is much below expectation. Investors have lost money.
Yes,
so
yes.
a very quick, although it's a separate question, but we discussed Paytm, we discussed Nykaa, and we discussed Zomato, and this is a major player. Nippon AMC has rewarded investors significantly. HDFC AMC investors have rewarded investors significantly on a sustainable basis. But many stakeholders say Aditya Birla Sunlife AMC, which got recently, and also the main promoter AB Capital has disappointed investors significantly. Your thoughts on that? And since you are associated with the AB Birla Group, very quick answer.
Yeah, sure. First of all, again, I feel right expert would be Mr. Ravi Jain, who was a
That's okay.
valuation.
No, that's okay.
Second, I'm coming to.
That's okay. You have to give your answer. We'll take it separately.
Secondly,
yes.
My thought is with financialization of savings, and Aditya Birla is definitely a very reputed brand. This is again purely my take. Closer to 600, if you get an opportunity, it can compound wealth. It can compound wealth over next few years. This is my take. It is closer to bottoming out.
Okay. Very good, clear answer.
Yeah,
now we go. Ravi, are you there?
Again, last 5 years, I am on my own. This is purely my take.
That's okay. That's okay. You are an entrepreneur, and
below 600, closer to 600, I feel it's a good buy. It's a good buy.
Yeah,
okay.
And it's with a caveat. Every investor should do his own due diligence and consult their investment advisor, stockbroker. Ravi, you are there?
Yes, I'm here. Yes.
Yeah, wonderful. Your take on what Krishnan said on Aditya Birla Sun Life, and then we move to transferable vote. I know you have got a wonderful insights, particularly the paper which came from the website. We'll demystify that, and Unmesh will also give us our thought process. Yeah, your take on what?
Sorry, my disconnect was there. I was on a short break, so I couldn't take it completely.
Yeah. Aditya Birla Sun Life. We discussed several companies: Paytm, Nykaa, Zomato, and Aditya Birla Sun Life got listed, and it has underperformed. It has a weak listing, and also it has been sliding. And on any comments or takes on the valuation, and then since you have done a deep dive, you can take it today, you can take it later, but just some thoughts, and then we go to the demystification of transferable vote.
So briefly, just as a name of Aditya Birla is a good name. So there may be temporary decline on the share pricing. So no detailed comment. We can take it this point later on separately. So and move further for the time being.
Good. Very interesting. As usual, we have a detailed, in-depth discussion, and also from various perspectives, opportunities comes, and also, and all angles are discussed. That's very vital, and people come to know the issues. So then promoter and all stakeholders can get connect together and try to improve valuations sustainable basis for the India growth story, and identify more compounders, as Krishnan mentioned, right? We look at good compounders. Nippon has created wealth. Nippon AMC, HDFC AMC has created. So Aditya Birla, whatever controversies group is involved with, including telecom, etc., it has created wealth for Ultratech shareholders, significant wealth.
Yes.
On metals also, Hindalco, and financial services is a very key area. Maybe something needs to be done in terms of perception. The A Bala is a wonderful guy, nice and humble, and talks about digital as a way forward, and of course would strengthen their technology platform further, and much faster growth on a sustainable basis with better service to investors. Yeah, Ravi,
Yes.
shall we move on to the next very important topic in the current period and the next few weeks and a few months?
Yes.
What is transferable vote about?
Sure, I will brief you.
Transferable vote क्या है?
I will brief you. If you want me to present this
What is on
document
the
of the ICAI
website? What is on
website.
the website? What is on public domain? If you can share that on the screen, and we can have an interactive discussion and any interaction, and then even other stalwarts can, Umesh can share their views. Just share it on the screen and
Sure.
your thoughts, because you have already done a deep study on this subject. Yes. This is it.
Recently,
Yes.
I have done a deep studies, being a partner in a CA, Shweta and company, and she is contesting the WRC on ballot serial number 13, and active in last 15 years in the institute and the branch related activities, and contesting the regional council now. So I am also involved, and I am also taken the deep studies on the subject matter, and to spread the knowledge and make the people aware the importance of vote, and voting to be done by everyone with a preferential system, because ICAI has a unique system of single transferable vote, which is also known as a preferential system of voting. This, if there are a number of candidates, you can give vote to not any one candidate, but you can give to all candidates with the preference of your choice of candidate. That is in brief the preferential system of voting and single transferable vote. So ICAI has given a detailed document recently on their website also, that what is the single transferable vote. So, and to summarize this briefly and let the people explain and understand this, what happens if you are giving a vote to one candidate, and if that candidate is selected and it is completed, and if that candidate is excluded and eliminated, then also that matters end over there. But if you give the preference of your voting to as many candidates as you want, it helps those individual candidate also to get elected and come to the council and represent the larger number of members across the region in reference to the council. So what happens if you are giving a vote to candidate A as a first preference, candidate B as second preference, and candidate C as third preference? So n number of preference you can give, as many candidates are available. So what happens when the total counting starts? First, it starts with the first preference of vote. So all candidates will be get total number of first preference of vote which they get, and total number of votes divided by the number of candidates plus 1 will be the quota, which will declare the elected candidates or the winning candidate. So that will be the number 1 process, step number 1, in which the elected candidate will be declared. Now what happens if the elected candidate gets more than the quota? So their excess surplus vote will also be again redistributed to the second preference of the votes given by those particular voters in the proportion of the number of votes which is exceeding the number of quota which that individual candidate is getting. So it's very beautiful concept. I have a separate video and separate Excel sheet presentations on that, which can be shared to the learned audience over there in a separate group of videos. But I will again summarize it. With this, what happened? Every candidate gets the maximum number of benefits of the people who are doing the vote and casting their vote, because the people who are selecting their right to vote is really making a difference in selecting the represented candidate in the council. Now, next step, when the excess quota has been distributed, if there is no excess quota, then the elimination round starts. The elimination round starts at the bottom of the candidate who is getting the least number of first preference vote. So that will be eliminated first. So what happens? All the votes of that least candidate who is getting the lesser number of first preference vote will go to the person who is next voted by the members. So second preference vote, if out of say for example 10 votes, 5 people has given to second preference to candidate B, and 5 people has given the second preference to candidate C. So if the candidate D is eliminated, B and C will be getting this additional number of votes in their total. So accordingly, this round will keep on going, and finally it will be only left the number of candidate which are equivalent to the number of seat in the council. So for example, in this election of 2021, which is going to be held on 3rd and 4th December 2021, for Western India Regional Council as well as the Central Council representing Western India. For Western India Regional Council, there are 45 candidates and the number of seats are 21. So out of 45 candidates, there will be 21 candidates which will be selected. So those 21 candidates will be selected with this single transferable vote. So every vote will have its own value and every vote has its own preference. And it will be really matter a lot to candidate who would be getting elected in this election. So this is the overall brief of the single transferable voting system. And this is a small 3-pager documents published on the ICAI website, which clearly state this system of the voting.
A very, very clear articulation, best efforts you have tried, and also shared about surplus votes which many are not aware. Umesh, you are there? Umesh?
Yeah.
Umesh, have you understood what is mentioned?
Yes, absolutely.
And is it clear to others? So transferable vote must be exercised because there are surplus above a quota.
I will make some addition. See, ICAI has given you not a single voting system. It is rather you are being given a choice to select your own council. If it is an 11-member council at central council level or 22 members at the regional council, then you can give the preferences not only 1 or 2 or 3, but you can go up to the last, whosoever the candidatures are there. On 45 candidates, you can give 1 to 45 also. Or if you are interested for your own choice council, then you can put 1 to 11 or 1 to 22, whatever may be as far as regional or central council is concerned. It is more important that you as a voter, you have to decide your own council and go on giving the preferences of 1 to 11 for central council and 1 to 22, whatever for the regional council. That is more important, because what you feel that these 22 people or 21 people who are most deserving as per your own criteria, knowledge, analysis, that should people come in the council. Then that way the voting pattern should. I have seen most of the time people go with the choice of first preference only, and then they don't do anything for the second, third, fourth. This is wrong. What happens? Your vote goes to only one person What about the rest people? See, ultimately it is a 12-member council or 22-member council for the regional council. In that circumstances, the decision has not been made by one person. It is a collective decision. It is a democratic process. So any decision will be taken through majority. It doesn't make sense that you send your only one candidate. He cannot do anything. You need to select your own council as such. And for that, the voting has to be or whosoever is contesting and whosoever is your choice. So it is a wise way of voting for entire council. At least minimum 11 members for central or 22 members, whatever it may be for the regional council. And voting should be done that fashion, because after your first person is getting elected or it is declared elected, completing the quota as per the quota norms, whatever is a fractional success voting is definitely going to pass on to the second person. And who is your second choice for the candidature or for the council, definitely get benefit of that. If you just put your number one in front of first candidate of your choice and then you leave away other thing blank, then after he gets win, probably it won't be of any help. Let's assume in the same fashion. Let's assume that every voter who do only choice of one only, what will happen? What will happen? Only those people who get the maximum votes of first preference will get elected and others will be automatically eliminated. But that is not what we do in our national Indian voting as far as our Vidhan Sabha is concerned or the Rajya Parliament. That is not expected, or it is a preferential, it is a voting pattern totally different, where your choice decided by you only. And it makes a sense that once you start going for preferential voting, who is the first deserving person, give number, Roman number 1, then 2, then 3. There are some do's and don't do's also. Some people do tick, that is not allowed. Some people do cross, that is not allowed. All these things are not allowed. Only Roman numbers are prescribed. If you see, the details have been delivered by the council at your home for all these things. All the things are there on website also. The details are being what you do and what you should not do on the voting ballot paper. All the details are there. This is a time that we need to educate our educated voters, basically. The chartered accountants are really educated, they are professional, but still voting is concerned. We need to educate them. We need to create awareness among them that it is a preferential voting. It is not a single vote. It is a preferential vote, single vote, but preferential voting. So transferable voting is there. So what is transferable basically? That has to be explained to every voter. Let them understand what is the way it happens and why your preference of 1, 2, 3, 4, 5, 6, 7, 8, whatever it may be, the numbers is important. Otherwise, always advisable while going for vote to go through the entire list of ballot list. Make a note on your paper 1, 2, 3, 4 who you want to go in the number way 1, 2, 3, 4, 5, 6, and then go and do the voting. Rather, I do that way voting in every council meeting, ICAI or WRC regional council meeting, voting. I go with my paper. I decide my own council. I want to vote for these 11 people for central and vote 22 people for the regional council. And based on that paper, I do. And for that, you need to study at the end ground level before you go for voting. It is not a sentimental voting. It is not voting based on the waves. Yeah, iska wave chal raha hai, uska trend chal raha hai. It is not something like that. You are a talented, educated, professional person. You are giving vote for a professional body, council of a professional body, who are going to take a policy decisions for the entire profession, not only for the profession but for the nation also. So it is our onerous duty that while voting, understanding the candidature.
Very interesting insights, Unmesh here raised. We will come back to you a few more points. Mr. Reddy, you have raised some valid point on the chat. Would you like to turn on your video and articulate? Mr. Reddy? Are you there? There is some point on recall of candidates. Mr. Reddy, you are there? Okay, I think till he comes, Ravi.
Let me answer that recall.
Yeah, you read the chat. Yes.
Yeah.
And then Ravi can also respond to it.
There are people who have choice of notas and then, but see, nota doesn't make sense. You have to select the council. Council selection में आपका role है तो आपका selection होने वाला है. Out of the remaining candidates, you have to decide a deserving candidate. That is one. Recall is going to be one of the most accountability point of view. Effort things. Rather, take the call. Non-performing candidate can be recalled in between. If that happens, I think the accountability will be at its top level, and then people will decide whether they are contesting the election for what purpose. The performance is only the criteria. If they are going with that intention, definitely things will be very different for the entire council. I think that.
Ravi?
Yes, sir.
Would you like to respond? And also there is one more point on compulsory voting, which is not possible in these days. Also, just answer that. Then there are a couple of other questions coming in for you from many people.
Sure. So I would fully agree with the Unmesh sir. Actually, voting nota system and all will not be practically workable because all the candidates who would be getting the votes in order of the preferences, the first 11 candidate will be selected in the Central Council and first 21 candidate will be selected in the Western Regional Council. So nota will not really make the difference.
Recall is a separate issue which is raised in the chat. Recall. That means a candidate who is elected, he gets recalled on for certain reasons.
I've not seen that chat.
It has come in the chat box about recall.
Recall elected candidate if not performed his role and not serve the purpose. Also implement e-voting method. Yeah, of course. So that goes into the disciplinary action if the person
against the council member and it is valid and it should be decided fast. But they, how long they should continue.
So it is something talking about the disciplinary action. If somebody is not doing the right thing, so there is a provision of disciplinary action. So it can be covered into that also. If a person is really not performing, so it's a completely separate thing. Which is the job and the role of the council level, that how they take the action against the person.
Another important point you could answer based on your experience. There is a lot of voter apathy. Many young people are saying they will not vote. And also another point is there are many voters, youngsters who say they don't know any candidate. So they don't know whom to vote. There is some disconnect for whatever reason. Maybe it's pandemic, last 2 years, there are no physical meetings, or maybe the, candidates are not proactive enough in communicating and speaking to the voters, or who speak to the voters for canvassing. They don't go beyond half a minute or 1 minute just communicating the name and ballot member. Most of them, they don't have time to listen to the voter, the concerns. What is your take on it?
So I would like to
a solution.
I would like to say and request all such new voters and the young voters one thing, that institute at their head office level has taken the good initiative, and in fact they are taking each and every election level, that they are sending a booklet to each and every member at their registered address. So that booklet contains the complete details of each and every candidate. So if, for example, 45 candidates are there, the name, details, and their credentials, basically what they have done, what is their qualification, extra qualification, and what is the previous work they have already done has been already mentioned over there.
So one important point. There are many people, including senior people at CFO level. They say they have not received the booklet. So is there a soft copy available? Can that be shared? Point is that. And second thing is, very few have received the booklet, and you don't have the cell number mentioned in the booklet, and you have a lot of irrelevant data mentioned in it, but there is no cell number. How does one communicate with the candidate? There are many candidates numbers who are not available, and here candidates are struggling to connect with the voters.
So it will be really interesting to know if the voters are struggling to connect to the candidate, because it's a practical scenario is other way around. All the candidates are struggling to connect to the voters. So in the area and relevant area, in fact, mostly the candidates are connected to their members by and large. And of
What
course, it's a
about the
well point
soft copy?
taken.
There's a specific question on the soft copy of the booklet. Is it available on a website, or do the candidates have a soft copy of this booklet who has not received? It can be communicated instantly in a minute over WhatsApp or
Currently, it's not
SMS link.
available to my knowledge, but yeah, of course, it can be checked and it can be made available. In fact, on the last day, on the voting days, this one pager form, the sample form has already been displayed to all the polling booths. Before entering the polling booth, also they can review those list of the candidates and then enter the polling booth and then make their final decision.
But there is a point coming from many voters. They don't know whom to vote, and here we are talking about transferable vote. And Umesh has suggested, they should vote for at least 11 members. They don't even know one member or two members or three members to vote. And this is a very important concept of transferable vote you explained, where there are surplus vote over a quota.
Yes.
And also one related question which has come, very important issue. When you are this quota system is there, surplus votes are transferred. So isn't it appropriate candidates communicate strategic alliances? Because I am going to get so many votes above my quota. Please, this is my number 2 and number 3 preference. Should not that be communicated and articulated very clearly to voters, so like-minded people can come together and contribute to the professional body and stakeholders in a more significant, appropriate, better way?
I think Unmesh sir is about to answer and make his comment. We will listen to him.
Yes.
I think this disconnect, rather the answer is our think tank platform. Rather, we are at the think tank platform. There are so many NGOs are working for even national elections. So similarly, there are so many groups are working for connecting the candidates and voters together. Think tank is going to do the same activity in coming next week. Rather, we are going to invite know your candidate, because there are so many voters who are not able to reach to the candidates, or rather candidates are not able to reach to the members, voters. We are going to have that program in the coming Saturday. Rather, the dates and details will be announced to all, where we are giving an opportunity of 5 minutes to every candidate to communicate, and rather the voters also get a time to have some few questions and answer on this program. I think this is a wonderful platform which will be made available in the coming week for all the candidates and voters to interact with these things. I think I will request all the candidates to take note of these things, or all the participants to take note of these things, and communicate in a large manner to large people, so that a lot of people will participate into it, and we can create a level playing field for all the candidates, not only the seniors who have already been contesting twice or thrice, but even the newcomers will also get a platform to communicate their agenda, their policies, thoughts as far as the election, for why they are standing in the election. And this is the one way we can go in a long way. And yes, definitely there will be a representation required to at least names should be candidates details along with their mobile and email has to be provided at least in the booklets, or at least the soft copy should be made available. Because yes, definitely it's not so easy. What happens? There are multiple numbers been having the candidates. Which is the correct number? Which is the real number where we can communicate? That is the need of our hour. I think that will be definitely taken over a period of time. Yes.
Excellent thing, and it's a level playing and equal opportunity feed for every stakeholder.
Yes.
So wonderful insights, Ravi. Final take from you, and then Umesh, you can give your concluding remarks, and then we close the session for the forthcoming sessions ahead with very continuous close interaction at a 360-degree view on all the aspects.
All right, a really wonderful session, and thank you so much for the opportunities, Manoj sir, Unmesh sir, and complete think tank team. Wonderful initiatives and wonderful opportunities for each and everyone. Thank you for all the audience also for patient hearing and bear with me. Thank you so much.
Thank you, Ravi. Rather, it is a great day for all of us to have an interaction with the stalwarts in the profession. He has been deliberated on the topic in detail, followed by Krishnan Shah. In a very short time, he has been taken us through the entire story of PF funds and then then mutual funds. Given us a lot of insight about all these things. Both these speakers have done a marvelous job of educating all the participants. I really patience of the participant also to have the interaction, detailed understanding, point to point, case to case subject. What are queries they are having in their mind been deliberated. And last but not the least, an appeal from the think tank and all that yes, this election we need to take the participation of voters in a maximum level. We have to increase the number of voters. So from that point also, we are trying our best to take care of the information required about the candidates, about the voters, and all these things. We are trying to make match with them. And yes, today also we discuss about the transferable voting, single transferable voting, how it works. So I think today we are done our job of educating the masses, educating the voters, and through different levels, through different educational platforms, and through different series of knowledge spreading. And we thanks from bottom of our hearts to both the speakers and all the participants for sparing their valuable time for the Saturday for the more than 3.5 hours plus. Thank you very much. Thanks a lot. Welcome.
Ravi is a source of energy. Ravi stands for light and sun. Wish you all the best. And as a host, Ravi, you end a meeting for all.
Thank you.
Thanks
You
to
so
everybody
much.
and all the participants.
Sure. Thank you, everyone.
Keep on coming regularly and share the link to every voter. And let us maximize the voting percentage. Ultimately, India is at the forefront of the global growth story. Indian professional bodies should not lag behind in any way, whether it is percentage of voting or in terms of transparency and accountability, and many issues raised, and have some of the best and highest valued companies in the world. Hopefully, in the top 100 companies in terms of valuation, we'll be having a majority one day with contribution of Indian professionals.
Certainly.
Thank you very much. Yeah.
Thank you. Thank you once again.
You can